Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live, April 14th, day before tax day. Hopefully all of you got your taxes done in time. It's always a pleasurable experience. Here we are, back to where the year began. Kind of wild, right? I mean, back to opening range of the year. A lot to discuss this morning. Some big headlines, market price action, but we'll get into all of that soon. Joining me in studio, senior economist Tracy Shuchart. Good morning, Shai.
Good morning, all.
Senior macro strategist Craig Shapiro. Good morning, Craig.
Good morning.
Senior market strategist Jim Cagnina. Good morning, Jimmy.
Good morning, Naples. Everywhere I look, I see green.
Yeah, I know. It's the everything up rally. Take a quick look at the tape. We'll get to Shai with the news. S&P pushing higher. Above overnight highs, above yesterday's highs. NASDAQ, so 69.41 in S&P, 25,878 in NIQ. Crude oil, just below 97. Not that weak. It is the front month contract. There is a lot of backwardation going on. We'll talk more about that with Shai. It's rolled this week, too. Gold's up $32 to roughly 4,800. Metals also catching a bit. I mean, platinum 20.93, silver 77.75. Copper, as Jimmy put a tweet out yesterday, is above $6. Bonds up slightly, 114.08 in the 30s. Dollar weak across the board. Everything gaining strength against the dollar. Really just the perfect kind of recipe right now for an equity rally. Boy, everything's fine. Everything's great.
Yep.
Nothing to worry about here, you know. And I'll talk about this more throughout the morning. But again, I put in my morning note, and I've said this if you've been listening to this show or if you've been following me for years. Markets price everything in so quickly nowadays, they price everything out just as quickly. And markets, just as they said in Jurassic Park, they said you can't kill the dinosaurs. Life always finds a way, right? And market always finds a way higher. It just does. It likes to go up. That's why it's always so tough being short. But we'll talk more and more about that throughout the morning. Before that, Shai, the news.
Well, some good news for Payward/Kraken. Deutsche Börse has invested $200 million in Payward, the parent company of crypto trading platform Kraken, as the Frankfurt Stock Exchange operator moves to offer access to a wider array of securities over the blockchain rails. The deal gives Deutsche Börse a 1.5 fully diluted stake in the company and is expected to close in the second quarter. The transaction values Kraken at around $13.3 billion with a B. Moving on, we have obviously moving to the war again. The U.S. and Iran are weighing further negotiations to extend a ceasefire as President Donald Trump presses ahead with the naval blockade to curb the Islamic Republic's oil exports in a step aimed at extracting concessions in peace talk. The objective is to hold fresh discussions before the truce is announced. Truce announced April 7th expires next week. We have been called this morning by the right people, the appropriate people, and they want to work a deal, Trump said at the White House, hours after the U.S. Navy began implementing the blockade of the Strait. Obviously, we have seen stocks continue to rise on that, crude ease. We have global investors grappling with the fallout from the Iran war have slashed their expectations for economic growth by the most in 4 years, according to the latest B of A survey of fund managers. Expectations for inflation, meanwhile, are at almost a 5-year high. The survey was conducted April 2nd through 9th among 170 participants overseeing $511 billion in assets. He said investor macro expectations and U.S. equity prices have once again diverged, Hartnett wrote. But that said, he said, the survey findings are contrarian positive for risk assets, provided the ceasefire pushes oil prices below $84 a barrel. On top of that, we did have a U.S. Small business optimism earlier this morning. Those numbers came out. Index slipped for the third straight month to 95.8, according to the figures. The
bullish.
Yes. The net share of owners who expect business conditions to improve declined 7 points to 11%, the lowest since October 2024. Obviously, we have treasuries advancing today as oil prices retreated. We've talked about this before, how oil how oil and the 10-year yields are correlated. So an ease in oil prices is helping ease the yields in the 10-year. We had some banks report this morning. JPM was a beat, but negative on net interest income. Shares are down on that. Wells Fargo also a miss this morning, but in those details, because we're trying to figure out this whole who is exposed to all this private credit. Wells Fargo did report they have a $36.2 billion exposure to the credit markets. This is kind of our first peek into
finding their way to be bullish again.
What's going on. And last but not least, for data today, we have at 8:15 a.m. Eastern Time, we do have ADP weekly employment change. And then at 8:30 a.m. Eastern Time, we do have PPI numbers out. We will be discussing that further at a panel discussion later when those numbers come out, because they will be March and pertinent to inflation data.
Yeah, well, they'll probably be bullish. Everything's bullish. Nothing's bearish. Right, Craig?
Nothing bearish on an expiry week.
No. And so are we in that window of strength?
We're in the
window of strength, Craig, is this big. The window of weakness is like that big, right?
Absolutely. And right as Shai was talking, there was another headline that came out. Iran weighs pausing its Hormuz shipping to avoid derailing talks. So market liked that headline too, basically, that Iran will keep, doesn't want to stir the pot here by sending some ships through that the U.S. military, which is engaging in a naval blockade, may have to engage with. So they're potentially not send any ships through while the negotiations are going on. So market took a little further lift higher. But yeah, this week I was just looking, VIX expiry tomorrow morning, largest VIX expiration since COVID. So, obviously with the geopolitical concerns over the course of the last, several weeks, people were using, this April VIX contract as a big deal. And so what we've seen over the course of the last several weeks is a complete VIX meltdown. We've been in negative gamma for the VIX, and that's moved, as we've moved lower here, it's helped levitate the markets. That positioning comes off the board at 9:30 tomorrow morning. And then Friday is regular options expiry, which is a monthly expiry, not as big as the quarterlies, but it'll still be pretty big. And so the window of strength kind of dissipates as we push through tomorrow morning into Friday. And then next week, the window of potential weakness is open, which means that the flows coming from option buyback and dealer positioning are less. And so the idea is that macro and narrative and fundamental stories, the flows and the human players can potentially overwhelm that daily flow. The market will be more susceptible to news if it's positive or negative. And so, we'll see. Obviously, the elevated geopolitical concerns are still top of mind. April 21st is supposed to be the end of the 2-week ceasefire. We'll see. There's been talks that there'll be more talks, this weekend again in Pakistan. Who knows? But hopefully we'll eventually start to transition to earnings, the economy, the impact of the war. And so now we're getting, the first look at some of the reports. There was, JP Morgan this morning, Wells this morning, both trading weaker after Goldman was weaker yesterday. Fastenal was weaker yesterday. Citigroup also reported. It looks like that's a little bit better. Later this week, we get Netflix, and into next week, we're going to get a ton of earnings and commentary about how the geopolitical issues, the energy price inflation, the supply chain disruptions, how is that going to impact the corporate sector and the economy? And then, this week also we get the last of the Fed speakers until, they go into blackout on Friday. And then the Fed in 2 weeks, what's the reaction from the Fed? Obviously, no expectations for cuts at this point, but are they going to continue to push cuts out? Those will be the things that the market will start to think about, transition to once we get through, this ceasefire. But, hopefully that's what we are left with is a ceasefire, nothing that pushes us back to that phase one, missiles flying again. I think everyone would appreciate that, but who knows?
Yeah, go ahead, Shai.
Yeah, but I was just going to say markets are boosting bets once again that the Federal Reserve interest rate cut this year will see a 40% chance. That's compared to less than a 10% chance on Monday. So optimism that we might get a cut. It's not totally factored in, but up 40% from 10%. And not this meeting, but this year.
Yeah, one this year.
Right.
40% that we get one this year. Not sure how much that's playing into all this. Again, there's so much between what happens with Iran and all this data, which today I think is going to be a big day to kind of see where we are with March data. I mean, let's see how the markets react to that. It'll be very interesting. Of course, we'll preview that and talk more about that throughout the morning. Jimmy, go to you. I mean, everything is up but energy today. So the market leader, at least in terms of sector within the S&P, has been the energy market. That is the weakest part of the market today, but yet everything else is up. What are you seeing in the tape?
Yeah, I mean, I'm looking at a daily candle chart on the S&P right now. It reminds me of April. Remember the temper tantrum or the tariff tantrum, whatever it was. I mean, how we had that V-shaped recovery. We're only 1.43% off of the January 25th high right now, and we're just driving toward that right now with a lot of targets on the upside. We're well above the yearly open right now, a good 40 handles. I mean, we could, 40 handles these days isn't that big, but that's still very constructive for the second day in a row. So, I'm looking at, maybe squeezing up here, making new all-time highs in the S&P sooner than later. I mean, there's going to be some squeezes going on, and people are jumping on the bandwagon right now at 69.41.
Yeah, I mean, yesterday I talked about 68.50 as a big area, and the fact that we're above that, back above 69.02 opening range for the year, and a strong daily close above it. Today we take out previous day's high. I look at Bollinger Bands opening up. It's hard for me not to see that we're not going to make all-time highs in S&P. I mean, I think the next target for me comes in at 7,100 as long as 68.50 holds, and it's like, bang, we're here. I mean, great for the portfolio. I mean, obviously if you've been holding stocks throughout this, which I think, I'm always holding some stocks. It's just, from the future side, again, you had to go through a lot of shimmy shaking through the overnight stuff. But here we are again, right? I mean, we're right back to where we, started the year. And, I think, again, it's going to be interesting to see how it plays out because I really have no idea. I mean, it does look to me as though we're going to make new all-time highs. And there's other factors that happen here again. Shai, I wanted to talk with you more about the backwardation that everyone's talking about on X. I mean, so it's interesting because you have equity markets that have seen past what's happening in Iran, right? There's not really been any real final conclusion as to how this ends, right? We feel that we're closer to the end, so markets are pricing it in. But along the way, everyone's been talking about how the backwardation has been taking hold and how, we always know the front month's going to be more sensitive to to what's really going to happen here. It's physically delivered. People forget crude oil front month is going to be physically delivered. We saw it go negative because why? Nobody wanted to take delivery. And then you see it go higher because people need to take delivery. I mean, It's what it is. But when you look in the back months of crude, that's where the real action's taking place.
Yeah, and if you still look at the back months of crude, the prices are much more elevated than they were, say, at the start of the year or right before the conflict started when the back of the curve was, all the way out was sitting at around $50. The back of the curve now is, substantially higher than that, sitting
but
at
lower
around,
than where we are now, right? In the
yeah,
fronts.
because it's backwardated.
Yeah, I know, but some people may. I just want to make sure they understand what we're saying.
Yeah, absolutely. So, but it's substantially higher than that at around $80 a barrel. So again, I keep saying higher for longer. Even if we do see some of that price inflate out of the front months, I still expect that curve to remain backwardated, which generally means it's bullish for the market because you expect prices to increase over time. So if you're hedging in the back, or if you're a hedge fund that wants to buy, you're going to buy the back end and hope those prices move higher over the duration that you're holding those contracts.
Yeah. I mean, go ahead, Craig.
No, I was just going to say, just think back to where we were at the end of January when the market was making a high. 2-year yields at the end of January were 3.6%. They're 3.75, 77% now. So we've removed interest rate cuts. since January. And December crude was 55.60. It's 77 now, so 30% higher for December crude than it was at January. We talk about a market making all-time highs again in the face of higher interest rates and higher energy. That should be a headwind, right? And so, we're 3 months later. The private credit stuff is worse than it was at the end of January, or at least the realization that it's going to be worse has pushed us further along here. The labor market's probably a little bit worse. Inflation broadly is higher. The consumer is in a worse place. And yet the S&P is, flirting again with all-time highs. It seems like there's a big divergence here between kind of the outlook for the rest of the year and what stocks are pricing in. We'll see what happens. I'm more skeptical. I know I mentioned putting more IWM puts in the prison pocket last week.
It's not like you too either. It's not like him to be skeptical.
But
the market is not the economy.
But look, I think what we talked about just to start off the show, right? There are certain times of the month and of the quarter where the fundamental stuff matters than other times. And one time when it really doesn't matter is in the few days of leading up into expiry week. That's where we are right now, and that's where we've been for the last several days. And so we've had this vol degradation and S&P levitation, really with not a lot of volume, just kind of ticking up, aided by the news. And even yesterday, right? I mean, we had the over the weekend news was negative, and the market just said it doesn't matter. The VIX is going to get melted. Let's go. Let's get this positioning off the board. But the risks are still out there. So again, and that's PPI. I think this PPI this morning will be interesting. We'll preview it, but PPI typically leads CPI, and so another big print there is expected. 1% annualized, month on month. Big double digit PPI inflation. It's a challenging, certainly a challenging economy, and risk asset prices are diverging from those fundamental realities that can't exist forever.
Yeah.
And I just wanted to throw out there, too, that, dated Brent, which is for delivery, not the Brent that you see on your screen, that is a financially settled contract, but the actual physical contract is trading at $132 a barrel.
Yeah, well, because, again, this is impacting Europe, or it's impacting Asia more than it's impacting the U.S. because we're WTI, and so Brent is really getting, pushed a lot higher. Now, Jimmy, I want to go to you today. This PPI number, going to be watching the bond market, right? The bond market has caught a little bit of a bid off of yesterday. Hat tip to you. You said it. You're like, I'm ready to be buying the dip here in bonds. It's been the same type of story. It was kind of teetering on potentially going lower. Again, markets come in and buyers came in and bought the dip in bonds as well. It's going to be something important to watch today. I think if there's anything that could slightly derail this rally, it could be this CPI or PPI and the bond market.
Yeah. Well, I mean, everything I said yesterday about buying dips is now kind of applying to selling rips. I mean, we're back above that 114 handle on the bonds, just by a few ticks, 30 seconds right now as we speak. But every time we kind of push back up now, sellers push us back down in the consolidation range. So it's really a sideways kind of maybe grind up. I don't know. The ADMA is kind of moving up really nicely. But if you remember back in January, we had that swing low, which really was a really nice area, established a nice area of support at 115.05, right where we're trading at right now. I extend that over and I say this is resistance right now. So when I'm looking at the bonds, we need a close above that 114 and 16 30 seconds before I really get pumped up. But we're seeing the opposite of what I said yesterday. We're seeing elevated bond prices right now by about a handle plus, but that can't get any more traction on the upside. Sellers are pushing us back down.
If you think equity traders are frustrated, if you're talking about trend traders, imagine how the bond market traders feel. I mean, the bond market has been stuck here. And again, we've talked about this. I think that the bond market being in this type of range helps equities. I mean, I try to find reasons to be bearish equities because I don't like to be short anymore. I've talked about this. It's just a tough position. You need everything to go your way. You need headlines, breakdown in technicals. You need, obviously have somewhat of a bad macro backdrop for the market to really get hurt. I mean, we saw it this year where there was enough to take us down. What did we go down to the NASDAQ? 10, 11%? I'm not even sure what the low percentage-wise in the S&P. Not much. And again, when you pull back, what happens is it sucks that volatility out of the market, And then you sit back and you look at everything and go, what really makes you bearish? Not the bond market. I mean, yeah, you're right, Craig. If you go from where we were at the beginning of the year to now, yes, yields on the front end are a little bit higher, right? For sure. And they're higher on the long end as well. No doubt. Okay. No doubt that's a little bit of a, potential headwind. But when you look at everything else, it's like, there's not really a lot coming out. I mean, obviously oil, but again, we talk about when you look further out in oil, would you say December 77? Again, it's like, it's funny how the market finds itself into this position. This is where we are today. And now we have to take the market for what it is today. It's slow markets, grindy, sideways, potentially grind higher. The tape has changed again.
Yeah, I mean, it's incredible. We spent weeks making kind of stair-stepping down with the war in the headlines, and then it's almost like we've taken minutes to recover, basically all of the moves here. And I think the flows really are, help that, right? We talked about yesterday the March 31st expiry day, that big JP Morgan strike, when we kind of rip through that on news and on the end of the month, that kind of puts it to another level. And then over the course of the last few days, again, the VIX expiry, removing those positions, and having the markets levitate, like we've seen this time and time again, how big the flows are in structured products and zero data expiry in a variety of things that are not quote unquote fundamental, right? Look at this morning, the NFIB survey of small businesses is making over a 1-year low, right? What is the best performing index this morning? Small caps. It does, like, fundamentally, whatever that means, that doesn't make sense.
It doesn't make any sense, really.
But the flows suggest why the Russell is outperforming this morning, right? The S&P is more locked in to the price there. NASDAQ underperforms a little bit. The banks are underperforming, and then the money will flow into the small caps. It's all about the flows right now. But as we move into the second half of this month, expect dispersion, expect single stock alpha to come back with earnings expectations being beaten or not. And as we start to think about the macro backdrop, fundamental investors will look to where they want to deploy capital for the rest of the second half of this quarter and the second half of this year. Energy and materials and the like. That seems like people will start to continue to look to buy the dip there. What's going to happen with the AI capex story? Are the returns going to show up? When big tech reports at the end of the month. So, expect a lot of that sector dispersion, and the macro fundamentals of the war will still matter. They'll matter more next week after the flows are gone.
Yeah. Shai, let's talk about gold a little bit. I mean, gold sits up at 47.86. We've talked really forever about what gold's role is in this market environment. But again, you have a little bit of a different market environment than where we were just last week. Is gold still in play? What do you think?
Absolutely, it's in play. And I think that, because we are seeing bonds up and traders are pricing in more chance of a cut, that obviously helps the gold market. Gold loves rate cuts. And so I think that story there, plus the fundamental backdrop of safe haven, central banks buying, all the things we've talked about before. So, when we do see bonds sort of get a relief bounce, that does help gold. And, if you are trading gold, it's always good to watch the bond market and good to watch, what the chances are cuts are, because gold right now is very sensitive to those moves.
Yeah. Last thing, Craig, before we go to this morning's edge report with Jimmy. The more I look at the tape, I guess there is one other thing that stands out to me that say, maybe you wonder, again, we'll see what PPI does for inflation. Copper, it's above $6.
Yeah. It's a sign that the global macro economy, is probably not as, maybe it certainly isn't as bad as feared at the worst depths of the war, when the S&P is down, 6,400, 6,300, and positioning got washed out, and when the assets were highly correlated, copper was seen as a place to sell and risk off, and I think now it's seen as a place to put capital back to work in a risk-on setting. Copper story is aided by the AI capex story. There's really no signs that is slowing down to any stretch of the imagination. Plus, if we're going to get rebuilding in the Middle East after missiles have been thrown, obviously copper's a big part of that too. So, but yeah, it's definitely part of the risk-on flavor, which is hard to fight at this point.
Yep. Are we positive gamma across the board?
We are.
and all indexes. Yeah.
Yep.
And tomorrow's Vixpiration.
Yeah, exactly.
Any final things we need to look at? I mean, with tomorrow being Vixpiration, of course, we're going to come back for PPI, but anything else like kind of top of mind?
No, just interesting that as that positioning leaves, the supportive flow of the VIX just getting sold every day goes away. And folks will start to think about hedging again, right? If the geopolitical stuff isn't completely gone, I think we're going to see some more hedging activity for May, right? I don't think people want to necessarily go home every night and say this war is completely over. There's still a lot of geopolitical headline risk overnight. So I think we're going to start seeing a rebuilding of positions, as we push through the end of this week into next week.
Yep. All right, Chet, good morning again. Smartest chat in the business. I mean, you watch it. I mean, it's like, it's us in the panel, and then it's Chet, and I'm reading everything that they're talking about as well, which is, helps with our discussion. 204,000 subscribers already. Hit like and subscribe because it's about that time, everybody, for this morning's Treasury Report. Take it away, Jimmy.
So, Deli, you read my mind. I have this copper chart up on the screen right now. This is a weekly candle. I just kind of wanted to get a big picture here of what's going on. Now, right now, we're tracking over $6, 6.0295 to be exact. And this whole retracement is almost done, right? The 23.6% retracement's right. We wick through it today. And if you think about it, if we were to close here, right now, this is the second highest close we've seen. Look all the way left. You don't see a higher close except for one. So this is a pretty nice bullish move off of these moving averages. Nothing really to talk about from the commitment of traders point of view, but looking pretty positive. Drilling into a daily chart now, I have another kind of a tighter fib. We're just chewing through that as well. We're above that 38.1% right now. And we have these target wicks, these swing high target wicks all over the place. This one is all the way back here on the 27th at 6.14, give or take. And then go further back, we see some more target wicks on the upside at January 30th as well. So I think this is a pretty positive market. Look at all of these moving averages. The fast moving averages are crossing over the slow ones left and right. That's also kind of a bullish idea. And then RSI is, it's consistent. It's just sloping up really nicely here. Not yet 70, but 63. Intraday, kind of a tight range today. Let me kind of spread this out a little bit so we can see it a little bit better. And I'll give you the exact range once I refresh my data. Just do this and this. Kind of a nice volume profile so far. It's relatively symmetrical, and nice point of control right in the middle, right by VWAP here. And it's price happiness as we speak right here, right now. But again, I'm pretty bullish. You're right in the middle of that London IB. We'll see if we can get past that JAX 3 again. That's a 6.05, and a little bit further up, we got some targets. We've got that R1 up here at 6.09, and then we have that one-day max by MenthorQ, 6.10 on the upside. On the downside, 0 DTE call resistance is framing the bottom of the conversation here. A lot of support down here around $6. Below that, well, we got a JAX 1 at 5.95. We're only at 39% of the range so far today, so there is room to grow. And real quickly here, let's just look up. We got to talk about the Bitcoin. We haven't talked about the Bitcoin. We had a great Sunday night show with Trader Main and Ponzi Trader. And look at this. We are really tight range bound right now. Moving averages are really sideways. The fast are trying to cross above the slow as we speak. But, look at my rectangle here. This is resistance right now. It's just short of that 75,000 level. Nice orderly rally, though. It's kind of mimicking, maybe not to the same order of magnitude, but mimicking the equity market a little bit off the lows here. And then the support is kind of in the rearview mirror down here around 63,000. So this is looking constructive. Close above the rectangle is going to be super good. We're above all the key moving averages, and we have that November 21st swing low target at 80,745 on my radar screen. That is this morning's Ed Report. Back to the panel.
Thanks, Jimmy. Back with everybody here. PPI preview.
So, we did have ADP weekly employment change. It came in at 39.25 thousand. So, better than the prior was 26,000. So, almost, let's call it 39,000. So, better than expected on that. And quickly, PPI month over month 1.1% is the survey. Year over year, 4.6%. And then, of course, we'll read the Food and Energy as well when that comes out in about 10 seconds.
And something else I'm going to point out too this morning, first day of the year's high, 69, 39, 75 in S&P. We're back to the first day of the year's range. It's kind of wild. It really is.
All right. PPI final demand month over month came in much lower than expected at 0.5%. Food and Energy month over month came in much lower than expected at 0.1%. PPI final demand year over year came in at 4.0%, higher than prior, lower than the survey, and Food and Energy came in at 3.8%, lower than prior, lower than the survey.
Craig.
Kind of a surprisingly weak PPI. Hard to get a read. You'll have to go through some of the details. I mean, still up, 0.5% month on month, but the expectation being, much stronger than that. My sense is that these numbers will remain firm for the next several months, with the strait being closed and the supply chain being disrupted. But, on the margin, a weaker than expected number here. Bond market, I don't know, didn't really, kind of was selling off a little bit with the ADP numbers, rally back with this number. But again, like you mentioned earlier, I don't think that there's much here for the Fed, to think about, right? I mean, the Fed is kind of on lock. The labor market is showing stability. Inflation is running hotter than expected, but this is all transitory. So, nothing really for the Fed to, the Fed's not in play here, right? Even a move from 10% odds to 40% odds of a December, cut, that's not really much for the market to really sink its teeth in here. And I don't think this data point necessarily is going to, move the needle much for the Fed. I think if the Fed were to see economic growth momentum, decelerate, that would maybe bring them into the fold sooner rather than later. But, so far, the early evidence from the war disruption is not that material. So we'll have to just wait and see.
Jimmy, looking at initial reactions off of this news, not much there.
No, I mean, 5-handle sell-off, maybe 6-handle sell-off in the mini S&P, not a big deal. Bonds haven't budged. They're exactly where we started, 114 and 5/30 seconds, and then just across the board, just eyeballing everything. Yeah, it didn't care.
Yeah, I mean, and to me, the bond market is the one that was going to tell us if there was any real sensitivity to this data. I mean, equities are so bad. I just put up a 15-minute chart, and I was looking at where we were from the gap, and I anchored a VWAP to it just to give me some perspective of it. I mean, you look at how far we've run. I mean, you look at the VWAP from that gap lower on Sunday night, 68.70. Everything still points to me like right around the 68.50 to mid 68.60s. Now that area is like a really big pivot for this momentum to carry for S&P, and it's like it looks as well like there's a lot of room for it to come back down and still be very bullish. I think that's the one thing. I mean, you see people in chat are talking about indexes overreacting right now. Everything's news driven. I mean, look at I don't really think the market's overreacting here. I really don't. I think that coming off the lows, the NASDAQ, I thought it was bullish. We talked about this. I said, when you can see the NASDAQ get 3 standard deviations from the VWAP for the year and the way that we were acting, and I talked about this a lot when I said, we're sitting comfortably, the market started to rally comfortably with oil sitting at 110, 115 bucks. To me, that was the biggest sign that it was just looking past it. It's like, I don't care anymore. The market started looking past it, and now here we are. Markets play catch up. Again, they price things in and they price things out like that. And the market wants to go higher. The market does not want to go lower. It finds momentum, it runs with it.
Yeah,
when we were go ahead, Jimmy.
Yeah, no, I'm looking at a crude oil chart. I mean, we talked about that March 9th close, that giant red candle. We closed at 94.77, and I added that volume profile. We're exactly right there now. So all of this time has passed, and look what happened. We're actually back to price happiness, and the volume profile does not lie. This is the key map for me. This is where most of the transactions happen, right at that point of control over this longer period of time. And look at that. We're tapping it right now. It's like gravity, man. It just brings it back. And so I think what we're seeing is some of this uncertainty, right? This market's still they react caustically when you have a lot of uncertainty. It's starting to get sucked out of the process. So a little bit more certain about what's going on. Not out of the woods yet, of course, very news driven. But I just look at this. This has just been the story for me, is this 94.77 point of control.
No, what I was going to say is, back when we talked about NASDAQ being that negative 3 standard deviation move, and being that detached from the mean in the year-to-date VWAP, it was pricing in basically Armageddon, right? It was pricing in that the war was going to escalate, and even further, that the strait would be closed for forever, that power plants and energy infrastructure was going to be destroyed. And so once we stopped that momentum, given how oversold we were, and given the kind of timing of the month and the expiry at the end of the quarter, you got the 1 + 1 + 1 equals 100 type reaction. And so even though we stair-stepped down, we kind of elevated back up here, and the markets have recovered all that move so quickly. And kind of once you get into the supportive flows environment, the negative headlines that have come out of the last couple of days, they don't matter, right? And so now we're back to expiry is kind of going to be behind us. We're back to an equilibrium, more of an equilibrium point here. And I think from now, we'll determine what the impact of the war was, how will earnings be affected, and the markets will trade a little bit truer. Doesn't mean they're going to go down, doesn't mean they're going to go up. It just means they'll trade more on the fundamentals of what has actually happened. And that'll go on for a period of time, for the next couple weeks here. And then again, we'll get back into these flows again, and we'll get back into that dynamic. But we talk about it, at nauseum. I know I sound like I'm beating a dead horse, but there are only certain times a month and a quarter where the stuff that we talk about actually matters. For the market. For the market, it's true. I mean, the things that we all need to kind of think more about. The structural product flows. It's going to be great talking with Jem this weekend about them. I know he's kind of the master and the godfather of a lot of this stuff. But they're such an enormous part of the capital structure of the markets that being blind to the dynamics of are we in positive or negative gamma, or what are the buyback flows from dealers into different expiry periods. Without that knowledge, you're kind of flying blind here a lot.
Yeah, I mean, I'm going to go to you, Shai, in just a second. I want to kind of talk more about the impact of these numbers, and if it's kind of setting a tone beyond this. But I just want to say, every morning we talk about market environment. I mean, I would say for me, one of the strengths that I developed over the years was just understanding when my strategy was really in play, per se, or like when the market conditions were conducive for it or when it wasn't, right? And one of the things I've seen over and over again is like, okay, I look at certain situations and I go back to this year, when equities, I like mean reversion. I like buying lows back into the middle. I like selling highs back into the middle, and that's what I look for. One of the key tells, and I think if there's anything you can learn about this recent market environment, is that when the trigger to me was crude oil, right? When crude oil continued to go up and equities could not continue to go down, just remember that situation, right? And understand that little bit of a dynamic. Now, it may not help you initially in helping you get into a trade. But what I've learned for me over the years is that the better understanding I have of the market environment, I've just become I became a better executor during the day. And I think when you look at where we are now, so now we've come back to the middle, right? And the market's priced out these headlines, at least for now. We know we're always a headline away for it to change. But now that we're back to unchanged for the year, whatever, the market environment has changed again. The market goes back to this autopilot of sideways grind higher, and everyone tries to fade it and they just get steamrolled. It's like yesterday I watched it rallying and I'm just like, you can't sell this thing. And again, I think to become a trader or a successful trader over time, context and nuance, we talk about it all the time. In the morning, we try to help you understand what this market environment is like. Every strategy works sometimes. Nothing works all the time. If you could understand the market environment, you could become a better executor in the situations. And again, hopefully we're helping you with that each and every morning. Shai, when we look at data today, PPI we knew was going to be important. We wanted to see March data. It feels like forever since you and I have had a discussion about fresh data.
Right?
Data.
Finally.
And now here we are. We've been talking about the possibilities of inflation coming in. You got crude getting jacked up. You got copper above $6, silver, all these things that we know are going to touch inflation. All the commodities, people coming on talking about how commodities been getting a lift. And the PPI data isn't that hot.
No, it's not that hot. Not that hot yet, but we'll see. But if we do look at the numbers, energy input costs jumped 8.5%. So that was a large portion of that any lift in that index. You have to remember, it still was prior was 3.4%. We're at 4.0%, so it's still higher from prior. Most of that is obviously energy. I think what offset it a little bit was natural gas and food.
So explain. So natural gas.
Yeah,
and food.
Yeah, that's what kind of helped offset it because those prices have remained muted, right? We never saw a spike in U.S. natural gas prices really in this whole time we've been trading in the $2 to $3 range.
Yeah.
So comparatively speaking, if you look at Europe, for example, that was trading at 70 at one point down to 55. So that has helped because a lot of utility companies use natural gas for input costs. And so I think that helped balance out, at least here in the United States, because our natural gas prices are lower. And then, of course, food prices, look at any chart, have remained rather soft throughout this entire 6 weeks or 8 weeks that it's been.
I don't know why. I guess I'm a little surprised at the natural gas story. I obviously understand. We talked about how the natural gas was going to become a big player, as we're going to become a big exporter of it because we're loaded to the gills of natural gas. I get that. But I didn't know how much of a dynamic it played into, PPI or CPI. Any thoughts on that, Craig? And how this dynamic is played out with like a softer, or not a hot PPI.
I think it's just things are just take time, right? We have inventories throughout the channel across a variety of commodities and end markets have built up stocks. Even the SPR is helping to defray some of the cost inflation, and so it's just going to take time to see the prices really show up in the PPI. But we're talking about 3.8% core. Last month and again this month, year-on-year core. These are high numbers, and so inflation is kind of certainly not rapidly moving back at any point to 2%. It's going to be a margin squeeze on companies who are going to try to push it along, and if they can't push it along, it's a bigger margin squeeze. If they can push it along, it's a further wallet share squeeze for the end consumer. So we're going to be dealing with an elevated inflationary environment for the next several months and quarters. Is it going to explode higher from here? Probably not, but it's going to be something that just kind of is nasty, sticks with us, and becomes a headwind for earnings as you push through the year. So the bond market here is, as Jimmy's pointed out, is trading between inflation and growth concerns, and I think that's been part of the bond strength. Has been as more people getting more concerned about the outlook for the economy later on this year, and the prospect that the Fed will have to be cutting rates to address that. But right now, I think it's hard to get a lot of that good data with so much going on in the supply chain, different companies being able to pass it, certainly who has more inventory or not. And so, am I surprised it was a little bit weaker than expected? Yes, but not entirely.
Yeah, Jimmy, we'll give you the final word. We got a couple minutes left before we go to TTrades this morning. Technically, let's take a quick look at what we should be keeping an eye on coming into the tape today.
Yeah, I have my eyes all over copper and all over gold right now. Gold is kind of consolidated and is coiling to borrow an expression from Tracy, in a very, very tight channel right now. We have all the moving averages in gold on the daily chart about to touch each other. We're right at a 50% retracement level right now, and just the construction of that daily chart and the intraday chart, I'm very bullish right now in gold. I think there might be some good day trades here. I'm going to be looking for places to enter. Full disclosure, disclosure, I look for some places to enter on copper as well, so I'm long there as well. But those two complexes I have my eyes on today because I just think there's so much potential energy building up right now, and I think it could break out one way or the other, and I'm leaning toward the bull side.
Yeah. Well, let's take a look at what's coming up next. We're going to take a deeper dive into the lineup today. Tape Talk with TTrades. Of course, put the markets you want him to cover in the chat. We always love having Tuesdays with T. We've got Trade the Open, Black Boxes, Merritt Black and Christian trading boxes. 11 o'clock Eastern, we've got Nick for a Tick and Leo the Tiger. Trade the Close, we've got XY, Stowe, and Jack. Panel, been amazing this morning. Any final words or any final thoughts anybody want to give? We just heard from Jimmy. Either of you, any final things before we head in today?
The only thing I would say is as we move through earnings season, dispersion comes back, right? People are really focused on the idiosyncratic single stock ideas. And so the indices might just chop around here. And, on any given day, banks will lead because of earnings or their lag. Money will rotate somewhere else. Later this week is Netflix. Next week, a lot of industrials. The week after that is big tech. So, but in earnings season, typically we get a lot of single stock dispersion, less correlation. The indices may just be choppier and grindier, but look for some idiosyncratic names and sectors to outperform.
Shy?
It is roll for crude oil. We have options expiry on Friday, and then the contract. So you'll roll on Monday, but so could have a two-way tape in crude oil and WTI with roll happening right now.
Careful on crude oil on expiration. You could roll those markets a little bit earlier, folks. They're just as liquid, a couple months back. Believe me, you don't want to get caught in a ripper. We've seen it too many times. This goes for gold, silver, all of these. When they get near expiration, they are a different beast. Panel, thank you so much. I'll see you guys later. All right, TTrades. What's up, homie?
How's it going? It's going well.
Good, man. As usual, everyone, Tuesdays with T. This segment is brought to you by CME Group, where risk meets opportunity. T, here we are, man. We're back to, I talked about this morning, the opening day's high in the S&P was 6939.75. That's where we sit right now. We come back to where we opened the year in the S&P and NASDAQ pretty much. Russell still continues to lead. The indexes, they're back, baby. They're back. What are we going to be looking at to start today with UT?
I mean, if you want to start in indices, we can start there and then go from that. But, we spoke about it back here, how the risk to reward was just pretty good on this Tuesday. And then last week we spoke about, I was just seeing after how do we react off this high. And if we fail to close below this level, it's bullish. If we close below that level, it's bearish. We failed to close below it on also taking out our previous day low, which creates a swing point. And then, we just get a move basically straight up from there. Now, I was looking for a higher low out of this gap right here. We do get that just on Monday. So for me, it's just a continuation higher into these highs. Now, if you notice, we've already taken them out. So I'm just looking to see, Monday we expand away. Can we get some sort of little consolidation on Tuesday? Then I'd be looking for Wednesday to form another swing point. And then maybe we can trade higher Thursday and Friday. I'm just remaining bullish on indices. We have a nice green monthly candle. I don't really try to fight that monthly candle. So I'm just remaining bullish. This isn't as ideal of a low. I kind of like the little bit of a deeper run, that YM gives us. But I'm favoring MQ just because it does have the strength on this higher time frame.
Yeah, I think that's key to point out, T, is that NASDAQ is gone from the downside leader back to the upside leader. And as you and I have talked about, I've talked about it a lot. You can't keep the NASDAQ down for too long. And when the NASDAQ starts to turn back up, it wants to lead. It's the market you want to be in rallies. And the chart's showing us that right now.
Yeah, once stuff started to flow into tech, you look at NVIDIA, Amazon, they're up 13% off the lows, or I can't remember. That's just when I was getting into them. So I don't know how much they are up off the lows. But, you get that nice move and, that's leading tech. So that's getting NASDAQ to be a bit stronger than the other small caps and such.
So just to be clear for today, so you're looking today into tomorrow potentially making a new swing low on Wednesday before the tape continues.
Yeah, so generally speaking, I like to trade the expansion. I don't like to trade after the expansion, right? So I like to trade, this big day here. I'm not a huge fan of trading after this, right? So we have a big, large day yesterday. We go and we hit this target right here. And this is where I can see some sort of retracement, right? We run out a high, we can retrace. So I'm looking to see, can we retrace, today, tomorrow? I don't really want to see us take out this low because that's quite bearish, because that's just going to leave us in a range. So I'd rather have us form some sort of swing high in this area here, or swing low, excuse me. So maybe Monday or Tuesday here, consolidation or some sort of, move lower. Wednesday we form a low and then see if we can get a continuation. So very simply put, I'm just looking for another higher low.
Got it. And how does the ES look?
It's relatively the same. I would say, it's closer to its all-time highs. These are some nice targets. So, I'm not trying to fight this month, but we do have our previous month's high as a target right here. So that's our next target there. And then I'm just looking at these monthly highs. And usually when I'm looking at targets, guys, I'm always focused on those higher time frame candles. So if I'm on the daily, I'm looking to the monthly for targets. So if you look at NQ here, that's why, this was a first target right here. But then this is also a swing point here.
Got it. And let's take a look at the Russell if you could, because the Russell to me is the market that was on the way down, not as weak as everybody else. Earlier this year, it was the strongest market. Curious where it sits now.
Yeah, it was holding up quite nicely, honestly, on the way down, when NASDAQ was essentially dying. We do have these nice targets right here, right? So we took out our previous month's high, and then we have these monthly highs up here as well. And it does have some strength. You can see it forms that higher low. And so as long as this low remains, right, that's kind of where I remain bullish from. So kind of the exact same thing, can we form some sort of continuation? And that's just because I trade swing points, right? So here's a swing point. I can look to trade this, but I prefer to trade those expansions. When we have such a large expansion, that's when we can get a consolidation.
Yep. Anything to look at in the Dow?
Not much. It's the weakest out of the three. And so, like we said, we try to trade the strength. So I would be focused on NQ. And you can just see NQ has the strength. YM, yes, it's bullish, but it's lagging behind. So why focus on that?
Yeah, and the chart just doesn't look nearly as clean.
Yeah, it's less appealing for sure.
Yeah, what are we thinking to go to next?
We can go into some metals. I saw Jim was talking about copper, which I also am in currently. We have this range, we take out the low, and then we form this reversal on the start of the new month. We respect that area right there, which is EQ of this wick, and then we're getting continuation higher. And so, this is just my little indicator here, but the only thing I have marked out is this level here. I'm just seeing, as long as this holds, looking for a continuation into this range high. And that's just a consolidation trade, right? Consolidation, we leave the consolidation. As you were saying earlier, you like that mean reversion, trading back into the range. This is trading back into the range to the other side of the range. So I would say, honestly, copper is quite interesting, as it continues towards this high. As we get into gold and silver, I prefer silver, as we spoke about, but just from the swing low, as long as we go back in toward this range, it's just, that's more of a mean reversion trade too, and then seeing if it can get some momentum towards the other side of the range.
What about, I wanted to see what platinum looks like. I don't see it in your metals. I wanted to see what it looks like, just because I kind of want the whole scope of metals right now.
Yeah, I would say platinum's also there. It's also just not as interesting. I don't watch it too much, so, I rarely honestly look at it, but it's kind of the same thing, right? We form a higher low, and then we're just getting this little bit of trend. It's not quite trending, right? This is more of a grind up, and now we're back into the middle of this range. And what do I mean by this range? Just from this high to this low, we're right there around the middle of it. And so that's kind of if you're looking at a mean reversion trade, this is the middle of the range. You're looking to trade back into the middle. It's at the middle, so now you want to see how price reacts.
Yep. What's interesting too, T, is like, we were at a moment where the metals were like in play across the board, like they were all going together. We had these parabolic moves, right? And since then they've gone into their own independent phase. And now we're in a phase again where when we look at indexes and we lump them together, maybe the Dow not quite as clean, but again, it's funny how you see the cluster of the markets when they start to work together. You get the cleanest moves, and that's why I kind of wanted to see what it looked like with platinum. And so if you're a metals trader, you just know that's really kind of independent. You're not really buying silver because gold's going up or selling gold because silver's going down. They've become much more independent. But equities now, they're really moving together. And so, again, equities are really in play right now.
I completely agree with that. When the sector is just ripping, that's where you can almost choose anything. You do want to choose the strongest one. So that's kind of the same thing with indices here. That whole sector is running. So it's like, which one's the strongest one? NASDAQ, it's like, that's the one you should focus on, but really any of them work. So yeah, I do agree with that statement.
What about
but now we can hop into oil. Yeah, Crudele. There we go. So oil, I put out a tweet. Some people didn't like it, but I watched the open this week and I was like, oil's up and indices are up. Like, which one's lying? Some people's like, there's no correlation between them. And for me, I've seen a correlation, the past few weeks between them. So I was just wondering, if oil's going to go down, then I see indices up. If oil's going to go up, then I see indices down. And so we react out of this gap on oil, looking for this to go lower. So, as long as this continues lower, I'm still bullish on the indices. So I'm just looking for this to continue into this swing low here, or this previous week's low. And then we'll see how we react there. But we also do have these lows over here. So I'll watch the reaction here. If we do get a very aggressive reaction, then we can maybe go higher. That could also signal a short-term high on the indices, or we can not react there and just continue lower. But I do want to see some lower oil prices, which, this is the first time I've kind of looked for this since this whole move up. So it's the first time we're looking for a little continuation lower here, or this lower high.
Yeah, and for those saying, there's no correlation, or however you want to look at it, I mean, eye is in the beauty of the beholder sometimes. It's funny, people can put up a chart that's trending higher, and people could say, oh, it's not a trend. It's just, it is what it is, right? And I think that, I am someone who looks at these opposite correlations. I like looking at, what's happening oil versus indexes, and I look at it from a bigger picture. I'm not looking at it for tick. And so when you see oil, which was the trade, higher, and everybody knows that when you're in a wartime situation, oil is going to be the most sensitive to the headline. And when oil is going up and equities are going up, as I've been saying this for the last couple of weeks, that's a tell. Now, it may not spill over into a trade, but it's an understanding of the market environment. And so, again, it's funny how people have different opinions on how people use things, and there's no really right or wrong in this. And I think, at the end of the day, you're going to trade the chart that's in front of you. And when I look at oil right now, it does look pretty bearish to me. It doesn't look like it looks like you had that big high. It tried to make a higher high, and now we're sitting here and are vulnerable for, I think, I wouldn't say significantly lower, but I wouldn't say the 80s are out of the realm of possibility this week.
Yeah, it definitely could go there. I'm just looking for, high 80s, 90, that area. For me, this is not something, I trade continuations, that. So to me, this is a high. This is a continuation of that high. So for me, the only option is looking towards these lows. This isn't something I would look to buy personally. And that's because for me to buy something, I need it to form a reversal and then look for a continuation. This is not showing me that it's a reversal. It's a consolidation. So I can only think in one direction here, and that would be lower on oil for at least the next day or two.
Now, a market that really has had an impact is heating oil on the economy, diesel. Let's take a look at HO. I know we don't look at that product too often, but I'm curious to see what it looks like.
This is a pretty decent look too. It has a divergence between oil and gasoline as well at these highs. So what do I mean by that is HO took out these highs while oil and gas didn't. And then we have a nice V shape here. And so that's what I mean with this can be seen as a reversal, and then once again, this can be seen as that lower high or continuation, and looking for that to go here. So for me, the thing that catches my eye here is kind of these lows in here. So what price is that? Around 3.5, that area there. So that would be kind of my area that I'm looking for heating oil to go to, diesel.
Yeah, and unlike crude oil, heating oil did make higher highs from that initial move higher.
Yes,
and so now you're seeing that. Yeah, exactly. Today, dollar weak across all the currencies. What are you seeing there?
Yeah, so I can't remember exactly what we talked about last week on it. If I remember correctly, we were bearish into these lows, but really that's kind of it, right? So it's kind of the similar thing to, I think we were talking about taking out this high and then we took out this high, and then we have a nice reversal. Is this going to set up a continuation? This same thing as oil, right? You have a reversal, this is a lower high, and then we get a continuation. Now we're below all these lows, and this is where I get a little less interested or a little more conservative in the short side because we've already expanded a lot. But for me, what am I looking for this target is I go to the monthly chart, that monthly low. So I would be looking to see for dollar to reach into this low and then see how we react. But I'm just bearish on this, right? There's no reason to fight a pretty strong trend, and this is a pretty strong trend on the dollar here. And if you zoom out, it's actually just the middle of the range. So if you look, we have this is the whole range right in here, and if you notice, the middle of that range is somewhere right around here. We're in the middle of that range. So also kind of a little mean reversion trade, which I hear you enjoy.
Yeah, I do like a good mean reversion. We've only got a few seconds left. I'd like to see Bitcoin. I'd like to see what role that's playing in all of this. It has caught a bid lately in futures, 74,600 and change.
I've just not been a fan of Bitcoin, honestly. This is not price action that I can really get a good look into or understand. It's just kind of moving and trending in ways that I don't really look for within my model. And so can't tell you much on this, but I would just be looking at reactions around highs and lows. But yeah, it's just honestly not something that I have a read on. The only thing I could look for here and say is price more likely to reach for its previous month's low or its previous month's high, right? And at this point, it's closer to its previous month's high, which just tells you, okay, cool, we can reach for this level up here around the 75K mark, exactly at 70 or 76K. So yeah, that's kind of really all I got is, 76K and then watch the reaction around it. But this isn't really something I have a good read on just because this is not the price action I look to trade.
Yeah, nah, man, it's tight, man. That chart is sloppy. It's not a lot there. Again,
you look at
we go back
this
to what we
versus
started
indices,
today.
And it's like, hey, we have a direction and a trend here. You look at Bitcoin, this is a consolidation to me. I just don't have a read here. The only thing I could say is look to 76K and watch the reaction around it.
Yeah. All right, T. We're going to end it there. I'm going to miss you in Miami next week. You're not going to be there with us.
Yeah, I won't be in Miami. I'm in California right now.
Yeah, living the dream, my boy T. Go check out T's YouTube channel. Check out what he's doing on X. T's my guy. All right, man. We'll miss you this weekend, but I'll see you next week on the show. Have a good week.
Yeah, see you. Have a good one.
All right, everybody. Chat, hopefully you're doing well. Busy morning, right? I mean, quick recap, and of course we're going to get into black boxes with Merritt and Christian trading the open today. Quick recap, and we'll get right into them. Again, equities this morning, we had a PPI number that came out. Not a lot of movement off of it, and the number didn't come in nearly as hot as many would expect. With all the fears of inflation out there, as Shai said, it was offset by natural gas and food. And again, you're looking to see if there's any data that's going to move the market, and we didn't really get much there. Tomorrow's expiration, you heard Craig talk about that. If you want to watch more about what he said, you could always rewind later and check out more of what that is. And he said we're in positive gamma. We're in this moment where, again, the flows are just very powerful to the upside. And again, indexes are working together. You saw that with T. You saw, the metals kind of, trying to all work together higher, but still independent, not really in play across the board. Energy is weak today across the board. Crude oil sits around $96. We'll continue to keep an eye on that. And then again, going back to what T said in the morning panel, weakness in the dollar, strength in currencies across the board. And you're really seeing a lot of green out there. Bond market's flat post PPI. Really, I think, again, it sets the stage for a possible continuation of this rally in equities. There's really not a lot out there. We'll have to watch for headlines to see what comes in and potentially changes anything. But we will have all of that and more throughout the morning session. But it's about that time to trade the open with Merritt Black and Christian trading boxes. Gentlemen, how are we?
Hey, boys.
Good morning, guys.
Good morning.
How are you, Dilly?
Yeah. I'm doing good, man. I'm doing good. I'm excited to see you guys this weekend.
Oh,
Yeah,
yeah.
me too.
It'll be great.
Gonna be
I can translate
a
for
lot of
Merritt
fun.
for us.
perfect. Yeah.
I'm not losing my voice this time. I got a little baggie. I got a little honey. I got a little herbal teas. I'm ready. We're not losing the
Oh,
voice.
that's good. That's good
That
to
is
know.
really weird. That is the only time in my life, the one time in my life I've ever lost my voice. It's only happened once.
Thank God. I'm ready
Destined.
for you to not yell in my ear for 6 hours at night.
It was a loud whisper, okay? I literally couldn't yell.
My ears were ringing the next day.
Any positions coming in today? Either of you?
I'm still long the S&P from a couple weeks ago.
Yeah, he's beat me with that swing, but I did join him on Sunday on that gap down. So
Yeah, that was really nice. He called it out in real time to me. He sent me a little message about it. It was a great entry. The cojones on this guy buying this Sunday gap down, really really impressive.
we're in an uptrend.
Exactly.
Yeah, we
It's
are.
just a pullback.
Yeah. It's funny, guys.
But the Strait of
It's-
Hormuz, man, how you do that?
Yeah, I know. Listen, man, we talked about it together the last couple
20%
of
of
weeks,
oil.
man. And I was saying how I couldn't look away from the fact that the Nasdaq and S&P were bouncing with the crude oil market, and Merritt, you and I had that quick discussion on it on there, and and I just said I can't. When I see that start to break down, and again, oil didn't make a higher high, it came off, and equities continued to run higher. I'm not surprised to see equities where we are. I think the real question, right? I mean, I don't think the surprise isn't what has happened till now. I think it's what happens next here, right? And so we'll get with you. I mean, here we are, Merritt, back above opening range for the year in the S&P. I talked about it this morning. The high of the first day of the year in the S&P was 69.3975. We're pretty much on that price right now. So for perspective, we're back to where we were on January 2nd, folks. So what's the next play, Merritt? What is, and I know you're still long, but I know you're going to have to navigate that.
Well,
so what are we looking at?
everybody's starting to get comfortable with the uptrend and de-escalation, whatever. I'm taking profits. I am the opposite, and I'm so proud of that. I love being the opposite of everyone else. I want risk on when everyone else is afraid, and when everybody else is just starting to talk about the uptrend, I'm lightening up. So that's something I think that is important for the viewers and the chat here. Obviously, you and Chris are comfortable understanding the contrarian we must be sometimes as traders. But I think the chat, a lot of times they're looking for consensus. They're looking for safety. They're looking for certainty. And I've said it a couple times on this show, like a lot of people, like to say on air that, there's a lot of uncertainty in the market and things like that. Guys, there's never not uncertainty. I don't care if there's big headline risk or not. That's different. But there's never certainty, and you never want to be a part of the crowd. You never want to do what's easy and do what's safe. That's kind of what you get paid to do in trading a lot of times, is take risks that are sometimes uncomfortable and against the crowd and things like that. So what's next from a technical perspective in the S&P here? This top left chart here is the yearly VWAP. And so a couple scenarios. Number one, my edge comes from the edges, and we are now in the middle third, if you will, the middle 50% of developing value for the year, which is a place where we tend to see, not always, but we tend to see more chop, more sideways kind of stuff. So we've entered that area. We could continue ripping, and we could run to my target, which is 7,100, right? It's let's run stops above these weak, mushy highs. So that's a spot that I've been looking for. But at these prices here, we could go all the way back down to 66.50, all the way to 66.50, and that wouldn't change a single thing about the picture of this market and bullishness. So what I'm saying here, being long-winded, is where we are now in the S&P, and and the NASDAQ, is a place where there is a huge amount of potential range in which it doesn't actually change anything about the technicals. It doesn't change anything about trends or reversion. And so it's a more tough spot to put on. There's no risk reward asymmetry here is what I'm driving at for me.
I mean, from the swing position for sure. I mean,
Yes,
I
yes.
agree. I mean, the thing
We've
could
still
drop
got
100
intraday
points, I'm still
volatility. It's
bullish.
still a day trader's market, as you continue to say. But from that kind of bigger picture perspective, which I think is good to at least touch on once a week, that's my 2 cents.
Yeah, I mean, putting risk on here, were you wrong? I mean, I agree with you. I mean, I just anchored a view up to Sunday just to keep an eye on it.
I saw
It's
that.
68.71. I mean, it's like, okay, if we could dip down there and get one standard deviation below it, I'd buy it. I mean, I'm not bearish this. I mean, there's very little. I think in order to keep momentum, I'd like to see him stay above that. And then I'd like to see him stay above opening range for the year. I think if we were to dip down to 69.02 today, it gets interesting just because we've been there so many times. Can we stay positive on the year? Just something I'm taking a look at. But
Crude is really
Christian.
interesting. Oh, go ahead.
Oh, you got something for crude? No, go ahead. Go to crude real quick.
I've been kind of
Time's up,
updating
Merritt.
this throughout
His time's
ever
up.
since the conflict broke out. Where does crude find support? Well, it's the uptrend, right? That first standard deviation for the year. And here we are one more time, right? So obviously this is a very headline and fundamental driven type of thing. However, as long as there's all this uncertainty and spikiness and not full resolution and clarity, the technical, a lot of people don't think it is, but the crude has been a very technical market throughout this.
It has been.
So that we are right here at this uptrend mark. So risk reward to me is actually skewed to the upside. If anything, I would like to look for longs, but man, how scary is that given we're maybe on the back end of the de-escalation type stuff. So that's hard to do, but necessary to do. Again, go against the crowd, ignore anything other than your process. So for me, this is a bullish chart. As long as, let's say, we're holding this swing low here from 91.50.
Yeah, I mean, I don't think that crude rushes to all-time highs anytime soon or recent highs, but I'm not bearish.
But there
crude
could be that headline.
I
I mean,
yeah, that's the thing. It could. I mean, again, that changes everything, but can't control that. Chris, you bought the Sunday night open, my guy. But you've been waiting patiently. What are we seeing today?
So for today, I was targeting this yearly open. We just crossed that yesterday. And now we are a bit extended. Let me show the 4-hour here. We have not, I'm a big trend guy, and we have not had a higher low pullback, meaning from that big fail breakdown gap down on Sunday, we just went straight up. We need to, and it's a normal behavior, we need the market to consolidate these gains and retrace to seek a higher low against this, it was consolidating for the last week, for the last few days. We broke out of this consolidation. We need a pullback to seek a higher low and consolidate these gains. So I'm wondering if that can happen here, because in this specific area, if we go back to the December and June and January, consolidation that we were in, I know I have a lot of zones here, but this was the prior consolidation in NQ, and ES has it similar, but this is the prior range. And this 700 zone right here that we see right in the middle was the bull bear zone. And we have reached that area here. So if we are to slow down, it makes sense that we see that here, or else we're going to need to have acceptance into 700 in NQ in order to then traverse back to the upper side of that December and January range, which is around 26,000. And I think based on the type of move that we've seen, we will need some acceptance there to push out higher. So for NQ, real quickly, that is this 6940s area, same area here for that range. So we need to reclaim that. Now, as far as the trade plan for today, we are into that 700 area. I was looking to see if we would hold a pullback after the morning push. We did, and we pushed out to the first sort of target here in scenario 1 at 700s. If we can continue to hold London's low or back test prior day high, you don't have to continue to think that we're going to see a sideways to higher structure. If we lose that, then we come back down to this overnight support here at 560s. And then if that is lost, we go do a full back test of that yearly open at 478 in NQ or 6902 in ES. And if that is lost, maybe a full breakdown of that into the 400 prior week low area, and then reverse. But I think that if we are to consolidate yesterday's gains, then we can really have a range bound day from 560 to 710s, especially as we enter earnings season as well. So I sort of think we're going to be in a consolidation range, but with a bullish bias. We triggered a weekly reversal. We're above all moving averages, and I will continue to wait for pullbacks into support to keep buying them.
Cool. Yeah. All right, boys. I'm headed out. I will see you guys this weekend, and I'm really looking forward to that. Chat, great morning as usual with all of you. Best chat in the business. 204,000 subs on NinjaTrader now. Only 181 likes, though, Chris. I mean, what do we think about that with over 1,000 people in here?
Listen, guys, I won't make fun of Merritt anymore. I know you guys love that, but I'll stop if you guys don't mic it up.
You're threatening chat that you won't make fun of me.
I know they're here
awesome.
for that.
That warms my
Doing what we
heart.
gotta-
I love that.
Yeah. It was a very warming moment. I know, really. It was a great way for me to leave you two guys here to discuss that. I always love that. Merritt, your comment last week, what was that? It was a sexual tension comment, I think it was.
Yeah.
It's always good to leave on a fun note with you guys. Honestly, though, can't wait to see you guys this weekend. Chat, you guys are the best. Like and subscribe. Show some love for my boys. Have a great trading day, everyone. See ya.
See you, brother.
Later, Deli. Morning chat. How's everybody doing today? Don't forget to press that like, all right, guys? Help us out. Help the network out. I think 1,000 likes and Merritt will shave his beard, he said. All right. See, there you go. If I stop making fun of Merritt, they won't like the stream. All right. We're buying, which pullback are we buying today? All the pullbacks, huh? They just keep getting bought, guys. Gotta align with that.
Not a lot of net selling on the tape as we march toward 10,000. There's been some passive selling at moments. I've been due for a parallels update for quite some time. will remind me later once more. I've also been due for a Ninja platform. I've been skipping that update for a while. Hopefully the old tech I'm on hangs in there for one more day.
All right, let's see what we get today, guys. We are at a notable resistance area. I am interested in shorting, but my go-to has been buying pullbacks into support. That is just...
Are you still long from Sunday? Or did you exit?
No. Still long, still, I mean, we just haven't had, any danger to sort of say, oh, I need to get out.
Pump it.
Yeah, it's been very, I didn't expect we were going to get this kind of reversal.
Sure.
We just broke through resistances like, if they weren't even there, if we didn't spend like months forming them.
I do remember you and Crudele laughing at me when you guys asked what my target was, and I said 7,100. I remember how hard you guys started laughing. The chat started laughing.
Oh, was little Merritt hurt?
Who's laughing now?
Did you come back with vengeance? Well, the real drug would have been holding it till 7,000.
I'm still holding it. I'm not flat.
Well, the full position. Okay.
Yeah. Okay. All right. Yeah.
So next time,
It's not
all
my
right?
process.
Next,
It's not my
next
process.
pullback. Bring back Crudele. Maybe for Halloween again. What is the indication of the danger for you to get out when the trend changes?
When the sellers start selling. Yeah, I don't know how to answer that question, MEA. I saw it earlier. How would you quantify a range if you were making an indicator? I mean, a minimum number of swing highs and swing lows that fall within, with a certain tolerance, right? It doesn't have to be like to the tick, but a certain tolerance of being inside of a certain established swing high and swing low type range, right? That's how I would start to approach it, I guess. Yeah. Ricky Chung has um, a good idea, which is to use a linear regression, and then you simply use the slope of that.
But you also don't need to. I mean, my answer would be in trend structure, trend structure mathematics, when this is your uptrend.
I'm spit my coffee out when you said trend structure mathematics. Please go ahead.
This is your uptrend. Whenever the trend fails, we come back and take out the last higher low, right? And then we put in a swing low, and then we bounce, create a lower high, higher low, lower high, etc. The range becomes the high of the swing high of this prior uptrend and the prior swing low. And all the structure inside of this is literally, technically, lower highs and higher lows, because the definition of an uptrend is higher highs, higher lows, right? When you don't have that, you either have a downtrend, lower lows, lower highs, or you have a period of non-trending structure, which means there are no highs being surpassed, no lows being broken down, and you have lower highs and higher lows. So technically, from a trend structure mathematical perspective, there is a range defined by trend or market structure inside that swing high and swing low. And you don't need an indicator for that. You just have to understand trend structure to know when we are forming that. Eventually, you guys see me trade wedges, those wedge breaks, that's all it is, right? I've identified where the range is, and then I'm looking to participate in the expansion of that range. Or, if you want to look at an indicator, yeah, like Merritt said, there's a famous one, 6 to 8 candle range, the new high creates a breakout. I have zones. I have this indicator here for zones, and whenever we're inside of it, we're in a range. If we're inside London's high, London's low, we're in a morning range going into the open. For those of us who are starting a swing account, do you have any sizing recommendations? I'm a percentage-based risk trader, so my sizing will depend on the spread between the entry and the stop. If it is a tiny spread, you can imagine that my size for a swing trade will be 20, 40, 50%. And that sounds like a lot, but in reality, if my risk is consistent, my sizing can be, that's the variable. Like it can be larger or smaller. That doesn't matter. It depends on the risk. Like for the IB strat that I trade and I talk about, sometimes I'll have 9 contracts, sometimes I'll have 28 contracts, but my risk is remaining at $600 per trade. And you apply that for day trading or swing trading, and it doesn't, sizing shouldn't be based on how you feel about the trade. Like it may not work.
Yo, mama, I have both corporate accounts and individual accounts, but hate to break it to you, a single member LLC is a flow through entity. You still get the Section 1256 treatment, but I mean, it just makes your ducks in a row a little easier in terms of maybe some write-offs and expenses, but you could have that as a sole proprietorship without that as well. But anyways, consult your tax expert. But there's a lot of people think you just, I'll create an LLC, and it just makes like some like cheat code, and it's not. YMMV. Whoa, here's a tough one from Uriah. I quit my supervisor job because I was profitable for 3 months, but I'm having trouble being consistent now because of the pressure to provide.
Yes, go
Any
back to work.
tips? Go back to work for sure.
Don't even step into that.
I once started a fund or managed futures CTA when I was like 20 years old because I was profitable for, I forget what it was, 6 months in a row, 9 months in a row, something. I blew it up the first month, lost all my clients. Yeah.
6 figures or 7 figures?
The losses?
No, the fund.
All my clients, again, I was 20 years old, were like $50,000, $100,000 kind of $200,000 kind of accounts. If I recall, it was definitely a total still in the 6 figures.
Okay.
The first the first foray into the old friends and family was not a good one for me. So yeah, look, that is certainly not the answer that you wanted to hear from us. I guarantee you that. But now, if you come back and say, look, I've got well, here we go. He is coming back and saying exactly that. I've got a nest egg saved up. Money isn't an issue. Just need to work on my psychology. Look, three months of profitability is not a track record. If you were to submit your 3 months of track record to Apteros, we would not hire you. So in my opinion, you just haven't proved it yet. Unfortunately, get a 6 month, 9 month track record with really high quality risk to reward in terms of like ROMAD, return divided by your max drawdown over the period. And then you've really got something that's a little more, robust sample size, that kind of thing. But look, the same thing's going to show up next time in terms of now it counts, now it matters, now it's you might have some money saved up, but you're also maybe even subconsciously trying to cash flow your monthly nut, and it's still there. So it's tough, but it's also a growing pain, right? So at some point you just have to take that plunge. And look, there's nothing I could tell you probably haven't heard before, but you have to um, work on your belief systems about what trading is, about just how random, the amount of randomness that's in markets, about what your job is. You're not trying to predict anything next. You're not trying to make money. You're trying to trade well. You've got a process you're refining, all these things. You've got to get in that space. You've got to be a really, really good loser. In order to become a winner, first you got to be a really good loser. A lot of people struggle with that. All that stuff. It's tough. But yeah, chat wants me to shut up, so I will do so. You guys take it away.
He loves hearing himself talk, guys. Why do you think he lost his voice?
Right.
I was like, when we met in April, I was like, yo, Merritt, good to meet you. He's like, shut your mouth. Shut your mouth. Let me tell you how good I am.
I put my finger across your lips. Just
shut your mouth. So I'm Merritt, first of all. Oh, wait, the market's open. Just kidding. No more jokes. I might be a little bit more patient today because it can be choppy here after yesterday's one directional move. Yeah, what a moving car, huh? What about that gap up in BE? I'm in that. BE, MU.
yeah, good suggestion, Sil, for sure.
Oh man, what a gap up in names. ARM gap up as well. NVIDIA is stronger. Look at that push in NVIDIA. Beautiful. Hopefully we're all
Still
long
some passive
some
selling in
stock
the
names.
S&P. Absorption. Shut your mouth. Shut your mouth when you're talking to me.
Oh, I did not open something that I need to open.
Good morning, Pabloshi.
Hey, Pablo. All right, so we're pushing out here back to that morning spike high. NQ's stronger. Strong, strong, strong. Yeah, it's like we're getting close to all-time highs. Semis are red, or SMH is. NVIDIA, AMD's red. So I do think we're gonna see some consolidation today as semi start to rest. Software is seeing a big reversal though. So maybe rotation out of semis into software to keep tech alive for today. Amazon higher. Amazon going new all-time highs, guys.
I still
All
say
right.
cocoa is like the most bullish chart I may have seen in a long time. I gotta buy some.
Hey, Larry. Amazon already owns Anthropic futures. I think they own 20%. All right, if we can form some acceptance here, then I'll consider a trade for higher, but I am sitting tight here for now. So far, we're following scenario one from the plan I shared. We held this area. We're trying to push out. There's just a lot of divergences up here. Maybe after like 30 minutes, we start sort of retrace a bit.
Soybean oil as well. What a run that thing has been on this year. It's gone from like 49 to 70. Huge.
That strong morning. What will hit 680? Coco? Yeah, yep, Caleb. I mean, even if we traded the first 15 minutes, which, in other times we're already in a trade 15 minutes before the open. Maybe we put on a trade right after. It's all situational based on what's happening in the chart. Anytime you trade, it should be like that. What is the context? How are you framing that idea? And are your parameters being met to execute on?
I agree. Doesn't matter if it's 20 minutes before the open or 20 seconds after the open or 2 a.m.
For me, there was nothing going on into the open, so there's no trade for me to put on. But
Yeah,
welcome.
I've got nothing to lean on for in the S&P. I'm bullish gold. I kind of thought about buying before the stream down here. For those of you who've watched, this is, obviously a kind of a classic, what we call extreme fade setup. I assume some of our fellowship students, I have them trading gold today. I assume many of them were able to get that trade.
All right, so let's see if this pullback gets bought or not.
Couldn't tell you, lucky dog. I'm sure there's there's a ETF or ETN out there for anything, isn't there? But that's not my world. I couldn't tell you. Quick little Google or ChatGPT will help you out there.
There's an ETF for sure.
Yeah.
Anything to attract AUM.
Exactly. How many ETFs exist currently? How
All
about
of
that
them.
for a question? How many ETFs are currently in existence? I wouldn't even know what number to guess. I wouldn't even know where to,
3,000.
yeah, I was going to say like 8,000, 10,000.
$9,500 globally, 3,200 US. So we're both right. Does this higher low here fail? This is the first higher low after this breakout, higher high, higher low. Does it fail? And do we enter a consolidation type of day? Yes, is quite strong here. How are cyclicals doing? Yeah, strong. Oh man, small caps went all-time highs, huh? Do I have an SMT up here? Well, we do have an SMT up here.
Jeff, is the crush spread, is that between soybean and soybean meal, or is that between meal and oil? It's soybean and soybean meal, right?
Mags are strong. Man, Amazon's so strong. This thing wants new all-time highs.
When are single stock futures coming? That's this summer, right?
Yeah. You gonna trade those?
I'm excited to be able to offer them for Apteros to traders who want to trade them, but I don't think I'm gonna like go into them. What'd you say?
I laughed.
I know what is it?
Such a dealer response. I'm excited to have the product to sell it.
Well, I'm not selling that as a product. It's just give traders ways that we've been unable to offer before to trade with edge and bring over maybe some equities folks into the futures world.
Oh yeah, I want to swing trade some NVIDIA futures. Think about that growth, like 10x. Woo. You guys are just gonna see me swing trade futures here.
Thanks, Jim. So it's the beans versus both revenue from oil and meal? Huh. Interesting. I learned something new today.
Man, it continues to be strong. Look at that. Spot ES is leading. We're seeing a little bit of rotation. Cyclicals are stronger today.
Cool. How do you do a comparison chart in TradingView? Does anybody know?
Yeah,
Do you do just like a minus or something?
press plus. So where it says the symbol search, you put in, let's say,
Yeah.
the symbol. On the right of that, there's like a plus sign with the circle. It says compare.
Okay.
And then you do that, and then you type in the other ETF or whatever vehicle.
Soybeans plus soybean meal continuous. No, that adds it. I'm looking for a spread chart. Well, now how do I get rid of it? There we go. I think you can do math like CM. Yeah. Use divide instead of subtract. Get a better ratio.
Oh man, SATS is moving. Guys, the market's on fire. Gosh, so many stocks, just nonstop. Just gotta wait for a pullback into support. Do I plan a trade? Yeah, I plan a trade every day. But after you plan it, you need to wait for that trade to come to you. I shared my morning scenarios. If we can get acceptance up here, then I will consider a long. But at the open, there was nothing for me. And I didn't focus on this failed breakdown immediately at the open. And I'm not somebody who just enters as price is moving already. I need to wait for my rules-based setup to show up. I am interested in a short, though, but that's my aggressive side here. We have a 2-minute RSI divergence up here. We have a divergence between ES and NQ as well. Is my entry too late?
Anyone in the chat in Scotland? I'm coming over there. I haven't seen a lot of Scottish representation in the trading world in my career.
You're gonna go take over?
Yeah, that's the plan. We'll see how it goes.
All right, I took a short, a little bit aggressive here as we failed the second higher low. We have some divergences between ES and NQ. We have an R-side divergence.
All the divergences.
All the divergences are here. But we're also, the Qs are into a gap here. Or I should say the TQQQ, but the strength might not be over yet. So ES might want 69.68 first.
Yes, chat. It is a golf trip over there. Yeah, I'll tell you. I'll tell you the list real quick. Let's see here. Royal Burgess, Glenn Moore, Castle Stewart, Royal Dornoch, Old Petty, St. Andrews, and Carnoustie.
All right, nope, it's not going to be ready.
Yeah, it's with some good buddies and my brother-in-law. It's going to be fun.
See, ES can reverse back down here as it consolidates. If not, we'll push out to a new high. Banks are weak. Home builders a bit weak. Small caps green. Industrials weak. Mags strong. Mags, that's what's lifting NQ up here. All right, doesn't
No, I
look
don't
like
have a
it'll work.
brother-in-law from Illinois. Strange question.
Yeah, BC, yeah, it's just an aggressive trade here for me. I mean, I'm still looking for a pullback to buy. I will be buying that later today when it happens.
Chat is playing the what state are Merritt's brother-in-laws in game. I have no idea how that came about, but no.
What do they want to know your brother-in-law? It's kind of weird.
Well, we were talking about the trip I'm going on to Scotland, and then they just a couple people just decided to start taking picks. We'll get an official gambling ring for it going later this afternoon. Merritt, can you break down gold from a VWAP perspective? I can see the bullish side on yearly, quarterly, but we look rotational on the monthly, and we're inside weekly prior value. Yeah. So yearly, quarterly, correct. Rotational month, inside weekly prior value, correct. We're at resistance on the month. We're, at the upper edge. And yes, we've reached a weekly prior value high, but we are imbalanced up for the week, so those kind of neutralize each other to a certain extent. But yeah, look, it's if you're trying to put together yearly, quarterly, monthly, weekly VWAP timeframes, and you're expecting there to be all timeframes in agreement, to have a trade, then you're going to be sitting on your hands almost always. You gotta kind of figure out what your priority timeframes are, what's good enough for a setup, what type of dissonance you can handle, and still have a quality trade, because a lot of times there is something that disagrees with a thesis you might have on other timeframes. So that's part of being able to do that work. So specifically with gold right now, if you're more of a swing trader, then yeah, I lean towards those bullish higher timeframes. If you're more of a intraday trader, then I lean more on the resistance that we're at on the lower timeframes. So it all matters, right? It's not just one thing in terms of your strategy and your hold times. S&P finally seeing some selling on the tape. We almost haven't seen any down candles in Delta since pre-market. It was nothing but buying. So a little bit of selling here, not much, nothing to write home about, but we're seeing some.
Yeah. Wondering if we hold up here and start to I would like this little consolidation to the support to get lost. If now we'll probably bounce and make a new high. Yeah, NQ is a bit weaker now. Mags are starting to pull back. We need semis to drop a bit. Let's see how that looks.
If I can pronounce the name, Yatishinko. It's called cumulative delta. It even says it on the screen. Order flow cumulative delta.
Maybe we can't see it. Maybe it's too small.
You get that a lot?
More than I like.
Oh no. So good. This is what the people come here for. This is what they're here
Listen,
for.
guys, if you can't make fun of yourself, then I have to, or else I'd be depressed from losing my kidneys.
No, I'm not a fan of people who can dish it but can't take it. The best people have us, you gotta, there's a confidence, right? You're okay with yourself, and you can take, the heat coming your way. It's good. It's good.
Need ES to drop here so so we can get this NQ drop. Oh, in reality, we need mags to see a pullback, but at least to backtest this breakout. I do think we're going to see a consolidation day today, especially with how extended we are. All right, NQ's trying to lose that morning pop high. That was a new spike. Something came out. We'll see if it does see a retracement. If ES can fail below this, really this last 20-minute consolidation, then maybe we do get a little pullback. I'll be moving my
Crude
stop
pushing lows.
down. So we're moving down. We're making a low. If we bounce up and create a lower high, then that's where I'll be moving my stop down to then bring down my risk on this trade. Oh no. Oh no. It's 10 a.m. IB trade. I'll be looking to place another IB trade if it shows up while I'm on stream.
Some buying coming in.
There's that little range in ES here.
Did you fellowship guys get another one in gold? And another one. Put you onto the right market today.
All right, let's see. Where are we at with we can get those likes up, guys. Like, subscribe, do all that fun stuff. Help the network out. There's gonna be more events, more community events where people get invited. So help us out. Oh no, make a boo. NQ is torn here. It's a little bit weak. Well, mags a little bit off the highs. Semis, hopefully semis can see a little bit of redness. I mean, I want to pull back in the markets, guys. Market is on fire. I want to buy it. I mean, I've been buying it all last 2 weeks.
So if you recall, chat from pre-market, if you were around, I was talking about the kind of the key inflection in crude oil here. If we continue to push through this area, this would be a contextual shift for that kind of bullish uptrend that we've been in for the year, and you could see some real fireworks. I think I might divert my attention to crude for the time being here.
All right, I brought my stop down. We're forming that lower high here. So we have a low, bounce here, lower high, and it's trying to reject. So I will not let it reverse above that lower high. And therefore my stop is coming down to that area. and that'll be minus 0.2R maybe. So I have very little risk on the trade now. And let's see if we can come back down here and hit my first target. Am I long Google? Yes, I am long Google. Yes, this is a 2-minute. I was a 5-minute chart trader, but then it moved on to the 2-minute because I found trend structure falls really well, and ever since then I haven't really moved away from that. So almost hit 1R on that drop. We will need mags to really see a little pullback here. Semi is a bit weak, continue to be weak. Home builders, industrial, strong. So cyclicals are holding ES up, and if mags and semis bounce a little bit here, we will see NQ bounce, which is why I brought my stop down and I can sit through this now. ES hasn't really done much though since that push. So maybe that's forming acceptance and we break out to new highs. I have very little risk. So if we bounce here, I'll be out. All right, I am out. Took minus 0.2R loss on that, and it was worth the try. It was at a good spot. My rules were met. The entry setup triggered. That's it. And maybe we drop now without me.
Next.
It looks like we're not going. If so, we hold this, then we're gonna. This is the higher low, right? Like I was short to seek a higher low against the breakout, but it might be this. Look at that ES pushing out of that little range.
Rude, just continuing. I've been watching it here for something of an imbalanced pullback, but no pullbacks yet.
Yeah, I didn't. Well, I did wait for my stop to get hit. So let me correct you on that.
I think they mean your original stop.
Yeah, but I moved my stop down based on the structure, right? So it wasn't like I just moved it. Like we broke down, we created a low, and we bounced to create a lower high. So from a trend structure perspective, this lower high needs to hold, and then we break down to new lows. That's what I'm looking to participate in. On the breakdown lower, we reversed. And so that's telling me that, hey, it's seeing a failed breakdown. But in moving my stop down to that lower high, I am aligning with the current 2-minute structure here. And if it gets taken out, that means we will reverse. And instead of the lower low, lower high, lower low, we will now see a higher high, higher low, higher high. Right? So I did my job.
Crude.
Oh yeah, yeah. I follow trend structure a lot. So especially on a short, like if I was in a long, I think some of you guys will already know that I just like to hold those for the whole day. But on a short counter trend, I will respect the trend structure better. And look at this bounce here into 1 hour already. Nice, awesome, Jacob. Yeah, if you took that, we were talking about that ES consolidation since that push. That was probably like 20 minutes. If you took that breakout, you are getting paid here. Man, Google new highs. Let's see that.
Downside target on crude 79. If for the swing time frame.
We have a pretty divergence here. ES is pushing out to new highs. NQ is not. Starting to see some rest in a lot of tech names and leaders. What's creating that divergence?
So what's the implication? What's it going to do for us?
Well, I haven't learned that part yet in Fibonacci education, so I'll tell you when.
It's not Fibonacci, bro.
When that happens.
Don't go there.
I haven't learned that in Elliott waves yet.
You brought it up. I was just asking.
I need a reverse trade button. I don't. Thank you, though. I'm not trying to, trade like that.
Yeah, the reverse button is a that's lobbied by the brokerages to make that button on the order for you. Yeah, that's a good name for it.
The
Cooper.
revenge
The
trading
revenge button.
button.
That's what they should call it. I know pretty much zero traders who with any consistency use a reverse button in any type of. Now, I said almost no traders right there. There's a very, very small edge case for when and where that could be appropriate, but for 99% of us, the reverse button is a bad idea. The give me my money back button, please.
Or NQ is a little bit range bound here.
Yeah, Josh Platinum, we were supposed to do that at some point. That would be fun to do. Get some ninja crew, and we all have to be in the market at all times. Chris?
Oh yeah, I'm into that.
The only thing you can do is like everyone has to be, it doesn't matter the size, just get in one lot or whatever. And all you can do is reverse all day long. That's all you have to do. That would be a fun exercise.
Yeah, Jacob, go to one of the meetups whenever, if you live in I don't know, somewhere tropical, the better. Look at that. ES is on fire. Small caps going for all-time highs here. BE is on fire today. Incredibly strong. I'll just be waiting for my IB trade here now in 15 minutes. Yeah, I thought we were going to pull back to a better support. I didn't think we were just going to see this kind of pullback. Very little. Yes, didn't even pull back. It just consolidated. Ouch, ARC. That sucks. So if you took this fell breakdown here, you're up quite a bit.
You know,
My IB
this is
trade,
funny. The past 2 years now, I've made my year in April. Last April and this April. So maybe that becomes a thing for me where I just trade 1 month a year.
do it. How do I trail my stop? Well, if I'm long and we're in an uptrend, I'll just keep my stop at break even because I am swing trading the stock or the future contract, and I'm focused on the daily structure. So I'm not looking at intraday action to make those decisions because it is a swing trade. Is my IB strategy explained somewhere? I talk about it here almost weekly. I'm essentially looking for there's rules. I don't share all the rules, but essentially I'm looking for, right now we're in an uptrend, right? In the overall market. I'm essentially looking for a pullback to get long. I mean, that part is very simple, but there's specific rules. There's different conditions that need to be met. Does it use the 9MA? I don't use the 9EMA. I use the 9MA. See that difference?
Solid.
But yo, look at this ES, man. Gosh, I don't trade ES, but now I'm wanting to. MU is on fire today too.
It's a 16 handle rotation. What are you freaking out about? It's normal stuff.
Listen, I just like to see moves happen, okay?
Yeah. Well, watch crude oil. We moving.
Oh yeah.
How did I recognize the low that I chose? Honestly, I would go back to watch the recording of the stream 2 weeks ago, right? Chris and I talked about it at length.
Yeah. We've reached a big support area. The trend had ended. And I used a 2-minute entry to leverage a multi-day reversal. I mean, that's what's the fascinating part is to get to a point where you could manage risk on such a small time frame and then leverage that across a daily swing. Just think about the potential as you get better at that trade idea. Eventually, you can get to Merritt's. But if you're cutting your winners, then you're not going to be able to stay around for those big winners. All right, so we have 10 minutes here. I will be trading a different, two different accounts. One is the Lucid accounts that I'm trading this in, and then my other personal account that's just for the IB trade. And we'll see if it works today or not. I am $15 away from passing these evals, so it would be. And you know what? That's actually there's a lot of traders out there who get so close to passing an eval, and then they just blow it because of emotions around passing that. But if you're trading a strategy with specific rules, I mean, I'm talking more on the mechanical side. I understand the psychological and stuff, but that just tells me you don't trust your strategy. You don't trust what you're trading. You're not okay with the outcome of a singular trade. And then you lose that prop account and then you're buying it again. You don't need to do that if you have all the data there to tell you this is a profitable strategy. You just need to, you need to show up as an employee. You were hired as an employee to press these buttons. And just show up and execute. Just say SMA versus no EMA. Your boss sucks. I get it, guys, but the IB trade only applies to ES and NQ. I've back tested NQ now for a year manually. Look at this nonstop. I agree with that too, Knox. All right, so we have 9 minutes. If you bought this little pullback, you are getting paid. Yeah, I did. By number.
Nick for a sig.
Yeah, yes. I manually back test. In TradingView, there's a replay function. You can go up to 2 years back. So I started at January of last year and I went day by day. And I wrote down, the outcome of the strategy with those rules. It's taken me maybe 2 months, an hour a day, 2 hours a day.
So is that the real Nick, or is that just another account that's?
No, that's I think is
It's definitely my favorite handle I've seen in a while. Well done. Well done.
I don't like doing auto algorithmic or auto backtest. I want to be in that action. I want to know what price is doing, how's it behaving. You're not going to see that if you do like a algorithmic backtest. And if you're not truly an algorithmic trader,
There's
how are you going to
quants
trust
rolling
it?
over in their graves right now, Chris.
Well, I'm saying this I've created algorithmic strategies, but I'm not, a devoted algo trader because I can't see myself like, how are you going to trade in a drawdown? Like, do you really trust it
It's
that
easy.
much?
It does it for you.
Yeah, but you see how many people I talk to where they've created strategies and they're down 20% and like, I'm stopping it. I can't.
Sophisticated people.
Yeah, the more, the higher the account balance is, the faster they stop. Nice. Yeah, I do it day by day.
I love you, but you are not serious people.
Yes, my trading is as systematic as possible, with just sometimes I'll put on aggressive trades like this aggressive short, but I managed risk well there. It was a good area. Took minus 0.2 R loss. That I'd do that again. I was looking for a deeper retracement to then buy it, and we didn't get that. ES didn't even pull back. But the IB is very hard, hard placed rules in place. All right, ES is finally slowing down.
Yeah, Paulo, I'm sure I have. I've looked at all kinds of I probably looked at 30-minute profiles more so than the hourly, but sure. Not something I stuck with, not something I continue to use, but I've looked at it.
What a push in markets.
Well, it's a long time for me because I started in high school, and you know, I count all those years. But at least 6 years for me before I could do something more than, oh, look, I've had 6 months in a row of winning, but then I end up giving it all back, or something like that. Um, a long, long time.
It took me 5 years to be profitable. I lost a lot. All right, IB is about to close. We'll see if a trade sets up for that strategy, and I'll take it here with you guys in the other personal account and the Lucid ones.
Hey, being break even for any period of time is really, really cool. Being break even is so close to profitable. It really is. Being able to break even
Yeah.
is something that I would go so far as to say 90% of retail traders never achieve. So it's a big accomplishment, and it says a lot about that you've got some skills, you've got some edge, and you've certainly got your risk under control. And so that's well done. You're right there. Keep grinding. Focus a lot. The movement over the hump is either going to come between the ears or from the review work, where you're finding out how to emphasize what it is that's working and how to cut out what's not. That's where I think you at that stage you start to make those incremental gains that tip the scales into to more profitability. Good for you.
Yeah, it's fantastic, Colin. Break even with or without commission? I don't think that matters. The commissions to me should be irrelevant because as you get better in your trading, you move away from break even. Are you really focusing on the commissions? All right, so IB is about to close. Essentially, you know, a high level view here is I'm looking for a pullback to start once the IB closes, and then I'll be looking for a long off that. You know, it may work, it may not work, but that is the plan here. We need this 2-minute 9 MA uptrend to end, which is this 9 moving average in black. Start a downtrend and then bind the reversal. I do not wait for the 50% retracement. If you wait for that, then you will miss out on a lot of trades.
For NAV, I'm based on NADRO concepts. I'm swing long the S&P from 63.76. Today, as I've gone through pre-market, we're in an area where there's really nothing to lean on. There's really nothing of interest. There's really no references to try to trade from, including even yesterday's range and balance and things like that. So no ES trades for me today. Could I have gotten on board with just continuation and with the uptrend in this little area here? Yeah, I might have considered it if it had wicked those lows and gone down a little bit lower here. As you see, there's no green dots on my little algo here since 6 a.m. this morning. There's not enough of a pullback for how I like to tend to trade. So for those reasons, I'm just holding the swing.
What a big move. Can we get a pullback, please? Please, sir.
May I have some pullback?
That reversal off that little fell breakdown earlier is now at 3R. We do have a divergence up here between ES and NQ at the IB highs.
And what's the implication of that?
Well, mathematically speaking, if you're I was going to say something with astrology, but I forgot the term.
If you're a Pisces, is that one?
Well, what's the one? It's just like it's sunrise, something sunrise. It's like it's weird, but anyway, that doesn't matter.
I couldn't even tell you what I am. People will be like, "What's your whatever sign, whatever?" I'm like, I don't know. I know the difference between a waxing Gibbons and a waning crescent. Let me tell you that much.
If Mercury's in Gatorade, so
It's quite unhealthy. That'll come back and bite you. not gonna lie, that
Right.
smells like pure gasoline.
My aggressive side wants to short here again.
Smells like Bigfoot. Craig Shapiro says Europe is desperate for energy, and yet the United Kingdom refuses to open the North Sea oil, one of the greatest fields in the world. Tragic. Aberdeen should be booming. Norway sells its North Sea oil to the UK at double the price. They're making a fortune. UK, which is better situated on the North Sea for purposes of energy than Norway, should drill, baby, drill. It's absolutely crazy.
Are you reading the news to us right now?
And they don't. And no more windmills. President Donald J. Trump. I guess he was quoting Trump. That sounds like a Trump speak.
Yeah, the IB strat works 60% of the time, all the time. Hey, thanks, Gerardo.
Shorted crude oil.
You did?
Uh-huh.
Oh, look at that pop. I just need a pullback for the IB strat, guys. What's the IB strat? I feel like I'm at this point, I'm saying it every 2 hours. Am I using a trade copier on the Lucid accounts? No, I don't even know how to use that, guys. I have 5 Lucid accounts. And I'm just using the trade of 8 copy function. That's all you need. It's fantastic.
Scale some here into 9290.
Here's how it looks. You guys like that equity curve? Is that okay for you guys? That's the IB strat here.
Nice paper trading, bro.
Thanks.
That's nice.
So I'm just waiting for a pullback here.
Very nice.
Yes, liquid cap. Am I still focusing on equities? Absolutely. That is where I have all my money. I'm long names right now. I'm long BE, MU, semis, Amazon.
Yeah, baby. Well, that's
Not enough.
it's on the move again.
My risk on prop firms, I'm risking $600 per trade. I'm trading both my personal account and the prop firms like at the same time for that strategy. The IB account, I started with 5 grand. It's at 12 grand now. And just, I trade once or twice a day. Oh, look at this rejection here.
What kind of market conditions, or do you know where you feel that the IB strat tends to work well versus conditions where it tends to struggle? Have you found any of that kind of thing
Yes.
in your back testing?
Yes, September was it still made money, but it was a very flat trade, very flat month. And it was because it's a trend following strategy. So in daily, 2-3 week consolidations, it's really not making much. When we have these big directional trending markets like we are now, or maybe
Yeah.
the downtrend at the end of March, that's where it makes most of its money.
Yep. Makes
Ye-
sense.
Yes. I trade both futures and equities. I started with equities. That is like my bread and butter. But futures are great. They provide good cash flow opportunities. I transfer my gains from those accounts into my swing account, so I can swing trade larger and larger as time goes. All right, so we're starting to get this pullback here. My job now is to execute on a long, even though we may be seeing a high, right? Like it may not work today, and you're playing out the series of trades here. So when we put an end to this retracement that we're attempting to do and we reverse, I will have to be taking a long. Oh, how am I focusing on both? I've traded stocks for so long that I don't really need to like spend a lot of time on them, if that makes sense. Like I just execute the strategy. I know where and how I need to buy, and that's all I'm doing. If a trade doesn't work out, close it, focus on the next one. But yeah, it's ARC, sure, but that's not the way I designed the strategy. Like it's very systematic. That would be applying discretion for this specific day, waiting for longs to get stopped out before attempting a new long. The rules are the rules. I swing both equities and futures. Interactive brokers. No day trades on equities. No. If it's a day trade, it means I'm getting stopped out. Mid caps and large caps, Jacob. I'm focusing on the sectors that are the strongest, right? That have, high or strong RS, like BE, memory, Micron, semiconductors. All right, so if the next candle breaks above this candle's high, I am taking long for the IB strat.
So I got scaled and stopped on the crude short, keeping that risk really tight on that. I would love to see it come up and take out this swing high at 93.70s,
Thanks,
somewhere
Gerardo.
around where this downtrend area is for me, and then see a little momentum shift and then pounce on it once again. So that's what I'll be looking for here.
All right, I got my order in place. If I'll share this. This is my indicator that I created. So the indicator plots my long entry for the IB strat, my stop, my partials, and then I have a separate indicator here that tells me for the dollar risk that I'm risking, how many contracts I need to put on. So I've been able to automate that so I can just show up and execute. Yeah, I would love to buy a pullback in AMD and Broadcom. I mean, just so many names that, that's why it's hard to think that the market will see a big pullback with so many names that people are wanting a pullback to buy. Yes, Anand, 2 minute only. ES is already breaking out much stronger. The cyclicals are leading here. All right, let's see if we trigger. All right, my trigger here.
Stop filled.
All right, I am long 50. I have my stop in place for both accounts. I got to do. And either it works today or not. But now I go in automatic mode, right? I did what I had to do, and either I get stopped out or it goes to my targets. What I do have to do is place my 2R targets. All right, 2R is at 51.50. Do some math. 851. Now, this is what I'm going to do, guys. I'm going to close, since I've passed the evals here, I'm going to close my trade here and I'll keep it in my regular account. All right, so with this trade, even though it hasn't hit targets, I've just passed all the evals here, all 5 accounts, but I'm still long the IV strat on my personal account. There's just no point in keeping the long on for the, since I've passed that challenge. And to me, passing this, even though it's monopoly money, it just confirms the strategy, right? I did the back testing and I said, okay, let me forward test with not real money, with a very small investment on my part. So it took me a month. I started on the 10th of March and it's now the 14th of April. And it took me a month to pass the accounts, make the $6,000 for each account.
Nice job, brother.
But I did start, thank you. I did start trading on the personal account as well, just because I'm impatient. And I said, well, if it's making money, I should be making real money. Right. So, that's what I'm doing here.
He's on fire!
My position size varies depending on the risk. I risk $600 on average. Today I had 15 contracts per account. Like, this is my personal account here that you guys are seeing now. I'm done with the Lucid accounts. All right, so let me take that away. I risk $600 per trade, and in a month that generated six grand. 55% win rate, 1.9 expectancy rate, I believe. And it trades 1 or twice a day. That's it. I don't need to do a morning plan for it. I don't need to do any analysis for it. I just show up and execute based on the rules. And, that is a systematic strategy. No, those were 100K Lucid accounts. Now this is my only long here on the other account, and I'll just share that here until the end of the stream and see if it works up into the next targets. And so my plan for this personal account is, for every $10,000 that I make, I'm going to be doubling my risk. So once I get to 20,000, my risk will become 1,200 per trade, and then 30 will be 1,800. Thanks, Sil. Alex. Yes, Virat. I explained it really, for the last 2 weeks since I created it. Or I didn't create it 2 weeks ago, but hey, thanks, Dave. That was my goal here, to share, how I created a strategy, talk a bit on the parameters, not all of them, but talk a bit on the parameters, talk a bit about the importance of, respecting your rules. Leo was giving me a lot of, what, because price was maybe 5 points away from my 6R target, and I waited for an hour, and then eventually it hit, but if you don't create the rules that you're going to respect and follow, then how will you continue to follow them in drawdowns or through a series of big wins, right? If you get 3, 4, 5 days in a row of big winners, you might get emotional and say, I'm going to size up. I'm going to go for it. But it's a reminder to not, and just be as rules-based as possible. I love Leo, but we were just making fun of each other like I do with Merritt. So 2R is at 51.75. 4R will be, I mean, if we get to 4R today after yesterday's move, I'd be very surprised. But that's at 25,880. So I would have to put my next target at 25,880, 880.75. Let's just say 881. And this is all the trading that I do, right? I mean, it's done in 10 minutes. I place the trade, I place my targets and my stop, and that's it. I walk away. Oh, is that you, Merritt? I didn't even know you were in here.
Who, me? Just hanging out.
Just hanging around. God, that's such a great one. What are you doing? Who, me?
Me? Just hanging around.
Why trade with paper money? Because I had to test the strategy, right? Why would I want to test it with my real money when props are here? A great lesson for all you guys, right? It's a very small investment. Guys, I lost 15 grand my first year in trading, right? But now with $50, $100, $250, whatever, such a small investment to see if your strategy works. Why risk a $10,000 account? But the other side of that answer is, well, I am trading it with real money, right? This other account is real money. So I'm making, as I forward test, I am making real money. You know, so.
Crude oil has slowed down here. It was really, really, really had a nice speed to it and whatnot. I really liked the short that I took, and it's done nothing since. It's really slowed down here. So sitting here, patience, not doing anything because nothing's setting up yet. But some type of little mini failure above these highs is still what I'm looking for. Quiet session today for me.
Gene, I would say that depends on your level of your awareness in trading. I did 3 months and I said, okay, I believe in it just because I apply what I know in my trading, right? I know what works, what doesn't. It's not like I'm just learning how to trade. So I applied that framework to the strategy. The parameters I created are aligned with my own personal strategy. But to go even further, I started to do a year-long back test to make sure I understood how the strategy performs under different conditions, right? And that's how I understood that in really long ranges, like in September, it's not going to make much. I'm surprised there was even all months were green, but it is, it's a trend following strategy. So during chop periods, it will not produce much. The max drawdown dollar-wise was around 3,200. So, one of the things with creating a strategy for a prop firm is you need to know what's the drawdown is on your strategy. Because if you started and your drawdown is 5,000 and you have a $3,000 drawdown, well, you just lost the accounts. Your strategy wasn't suitable for that, for those parameters. So I designed it with that in mind.
Hey, Savas, I think what sort of risk-adjusted returns would I like to see from someone submitting a live track record? I've said it a bunch of times, ROMAD, R-O-M-A-D, return divided by max drawdown. If, for example, when we're looking to bump traders' risk up on the desk, we're looking at ROMADs north of 2-to-1 on a month basis for an intraday trader. So it definitely needs to be better than that. If you're submitting a track record of say 6 months, we're literally looking to back traders that show risk management that showed trading with not only edge, but risk-adjusted edge, right? So, if you drew down 10,000 to make 10,000, that's not very attractive, right? Why would a firm want to put money behind a strategy that is 1-to-1 in terms of how much it draws down versus how much it makes?
No code. This is all manual. This is a manual backtest, manual strategy.
He's
If
like a
it had
hybrid.
a drawdown of 30% or more, I probably wouldn't trade it. Hello, fellas.
Hey, Nick for a sig.
Good morning.
Have you seen
Good
this
morning,
guy?
guys.
Oh,
God.
gosh.
Dude, are we doing this again?
Production said, hey, we're bringing in Leah and Nick. So here I am.
That's my cue to step out.
Yeah, I think
have a
that's
good
it
day,
for me, guys, today.
Hey, make all the R's, all right, guys?
Don't worry.
I don't want any
Get 'em
R's
all.
at this point.
We're making ours.
I'm also short, but I don't want any of the R's because of what Leo just did.
Hey, we had to wake up the chat, man. It was dead.
All right, what are you saying?
Yeah.
I'm saying the chat was dead.
Why were they dead?
I don't know. Why are you guys dead?
It was a Q&A. What do you mean? They were asking me how I can make 6R and you can't. I had to answer.
I don't even know what you're talking about, Chris. How many R's did you make today?
All the R's. That's all you got to
All the R's.
worry about.
Hey, you're a big R's guy. Name all the R's.
In Spanish? All right, guys. Everybody, good sesh, educational, Merritt. That was a good long or short on the oil one. But I'm heading out.
Yep. See you guys. Take care.
All right, guys. See
Peace.
you in Miami. Not you, Leo. Thank God. All right, bye.
Later, boys.
Leo can sure clear room. That's right. In more
they were
ways than
trying to
one.
they were trying to exit as quickly as possible the second you started speaking like that.
Hey,
They didn't
man.
even want to see what we were thinking, how we were doing, how we traded this morning. They were like, nope, F this, I'm out.
Just get the hell out. It's our turn.
Oh, good morning. Hey,
Good
chat.
morning, Nick. Are you short?
I'm
Did I hear
short.
you say you were short? Yeah.
Yeah, I took a small long earlier and covered way too early because I'm for some reason continuing to go against my thesis, which is just to be bullish. On both counts, it's covering early and now shorting this. But I would hope for more of a two-way trade today. 800s, this 820s spot was kind of that next, I think, level up that we were talking about yesterday afternoon, like the next distribution up there. So we'll see if we get some resistance here that I can ride down maybe back towards 740s ish.
I like it.
Maybe 760s. I don't know. I'd probably cover it. I took a stop to do this the first attempt up here. I let it kind of come back and stop me out. So It is what it is. Chat, how are we doing?
How short are you?
I am
Jacob
all
wants
of
to
the
know.
shorts.
Nick is all of the shorts.
Yeah. Big short guy.
Long, but
You
it
trade
looks
this morning?
stumpy. I was also short right on this break here of 806, and then I added here 805. Got stopped in the last part of it, and I didn't re-enter unlike you did because I was introduced by production as Leah, and I was really trying to trying to find that button that turned me into Leah. And I think that's really at that moment in time where it really made sense to take the short. So I'm going to send a bill to production for the unrealized gains that would have been in my account had they not trolled me right before we came on air.
Maybe you should have re-entered instead of trying to meme everybody.
I do like the short though. It is kind of it's not a ballsy trade, but it's at, top of the range here where we've done nothing but suggests that we're going higher. We've broken, this higher time frame resistance, and you would assume, next targets are quite a bit higher. So
time it might work is because usually when we kind of push into an old distribution, you get that little fade off the first attempt.
Yeah.
So we're getting that dump now. So I'll gladly make back all the money that I just got getting stopped out here. Because I was in full size still and with a 3 lot. So it took a little $600 loss. So I'm basically even on the day. Which I hate doing because that trade did go like 30 points in my favor with all 3. So God knows I should have covered one. Whatever. Okay, at least let's go to like 760 somethings. Chat, are we all bulled up for the new trip to a new all-time high? Just like Liberation Day or post-Liberation Day when we just apparently are going to go like 20% straight up without a pullback? Because that's how it's starting to feel. A little bit of a lockout kind of rally starting to form here, I feel like.
Leo is an engineer. No, I'm not. I'm the farthest thing from an engineer you can possibly imagine. Man, I almost bought that and hesitated just long enough.
Though, I mean, we didn't even get the VWAP, but that
I
was
know,
like,
but it was just like the break from this consolidation early this morning is right up here.
I was going to say that was like that previous 4-hour high. Right there. Oh, come on. Really? I mean, I guess that was the 760s that I was hoping for. But this was the original trade thesis. I had one cover. I had a limit order cover there on the 3 lot, and that would have been the first one. So now I guess, I'm watching to see if this just reverses on me. Again, still looks pretty constructive. Hand on reverse button. No, I'm not good at these kind of reversals because this is the second time I took the same trade. So I like the fade off of here, but I have finger on flatten basically. I don't know if I would have the enthusiasm to want to press reverse right here. Maybe a touch lower. It does feel very slow today. What is our vol? 73. Yeah, the range is only 164 points. Once again, it's just like we push out of yesterday's range completely during the overnight and then get left kind of with not much to do. Guess I need to start trading, waking up at 3 a.m. to trade London or something.
You can hang out with Kane.
I'm never going to do that. Let's be serious. Not hang out with Kane, but trade London.
That's
for what
brutal.
I do every day now and what I'm comfortable doing, which is like taking a trade like this it hitting, hopefully, and then just like being okay with that being the trading day. Like,
and then vibe coding with quad.
Yeah. That's pretty much my days. Like I will gladly make $1,000, $3,000, $5,000, whatever it is in a given day. Just not trying to lose too much any given day these days, and just kind of moving on. I sleep better when I do this. Granted, yesterday I feel like I barely traded. I took like 2 trades, and I somehow was still in my office the entire day.
I may consider buying it here. I'll be watching for potential bounce trade back up into the top of the range. It's a decent little pullback though for intraday. It just feels like that moment where we could get a flush all the way into back into the morning's opening range, or this just gets bought up for a continuation. So I'll take a stab at this here. Seeing some buying come in.
Yep. Don't love that.
It sure is not as aggressive as it was on this first run up.
Yeah, it definitely feels like we've slowed down here heading into
our vol 73. Oof.
Yeah, slowed down heading into the Euro close. I mean, even off the open, it didn't feel like it had the same oomph that I feel like even yesterday we kind of did to start a trend day to the upside.
I mean, April is just a month for low volume.
Is it really? I guess I've never noticed that much. It being that bad, but maybe because I'm still like hyped on March, or maybe because last year we were still dealing with post-Liberation Day.
Right. Last year was unique. But
last
usually
year was
April is relatively slow.
Then we get another classic seasonality weakness into May, and then we just start drifting, levitating up all summer. Can I explain my trade thesis? I mean, sellers obviously stepping in there above the IB high, but if you look at the longer time frame chart, I mean, I even posted one of my daily chart today, but this is just like the bottom edge of another distribution of balance in NQ, like the 820s. It's like just there's a bunch of consolidation between the 820s and like the 26,300 kind of area. Is like the top edge of that range. So we're just at the top edge of one distribution and testing into another distribution. And when you reject off of it, do we kind of go rotate to the other side of it? So I'm basically just playing support and resistance right now. And then my entry confirmation was what I was seeing in real time on like time and sales. So I'm probably going to exit this because it's starting to, we get over 790s here. It's not going to be fun for me. Have you guys seen that our vol is higher during high time frame downtrends versus uptrends? Yeah, that makes sense, I guess, in theory. I've never actually looked at it on a higher time frame, but I would imagine the relative volume is a little higher during sell-off periods than uptrends. Uptrends tend to be lower volume because, yeah, that's just like the same thesis of slower drift up kind of grind days. Like that makes sense because our vol would be lower on those periods in the market than during high velocity down days. Volume is much higher when we are getting weakness. Does anyone have stats on how often we get 2 trend days in a row? I don't know. I don't know if I'd call this a trend day yet.
Yeah, I wouldn't really classify this as a trend day.
Not from RTH at the very least.
Mm-hmm.
How did I break the short bias? I mean, I just naturally like to sell things, but I wouldn't say I was ever like short bias. I just had that lean. But a lot of the time, because you feel like if you're patient, sometimes you feel like you're chasing, like you're late to a trend day like yesterday, and you try to fade it. I think I've just started to hit stride a little more of like not putting money at risk when we have sessions like that. I see them earlier now. It's like an experience thing. But I also just feel like I thought I saw the tape turn when we were testing this, or sorry, when we faded off the second attempt of a 23,000 break in NQ. It just felt like something shifted there with the second round of buyers kind of stepping in below that. So that helped me kind of flip my bias on the longer time frame to not make me feel like trying to short the lows anymore. I've also said it. It's just like we've seen some of these Trump tantrums and like war headline situations or that type of market where you've seen this movie before and you know the tendency that we kind of have, and it just takes the smallest semblance of like good news to just accelerate a move back to the upside. And we saw that on Tuesday last week. I didn't believe the gap down.
You thought it was fake, huh?
Yep. Not that I thought it was fake. It just looked like it was immediately going to get bought. I'm going to get out. I might, if I get a chance to re-enter, I'll re-enter, but I also didn't feel like this round tripping me again because I was talking and not covering. I hate that I got back into this, the second attempt on this trade with a 1 lot instead of the 3 that I was in the first time, but whatever. I don't believe all this buying. I mean, trust me, it doesn't take much to get me super bearish, but it's hard to want to fade this right now. I'd much rather catch a decent down move than trying to call, okay, this is where it's finally going to reverse. This is where the buying really is being fake, and now I can jump into a swing short. At this point, I really think we will make a new all-time high before we go retest the lows of this war cycle, whatever you want to call it. We're still inside the IB. Yeah, exactly. That's why I wouldn't call this a trend day.
Surely we can tap the IB at least once.
Probably.
There we go.
Yeah. ES just still looked a little strong, even on the weakness NQ was saying. There it goes. My goodness. There goes ES, new high. Or right on it.
I'm just scaling out as we tap this IB a little bit. Trying to hold for momentum. If we get a break of a new high, I think might be able to get a new push. I need Chris to, tell me how many R's I'm getting here. He
All
says
of the
if it's
Rs.
not worth 7 R's,
You don't want
put the trade on.
Oh, my back. $10-mile, yeah, that makes a lot of sense. It's really never trying to trick you. And I even said that too. There's a line in the course that talks about if you found a level that only you are talking about taking a trade off of, that's a level that's not a level. That's you possibly having an entry that's kind of in a dumb area. The obvious levels are probably some of the best levels because everyone's looking at them. Because the market obviously it matters to the market in some capacity.
Yeah.
Versus if you find a level that nobody else sees, that's probably not a real thing. The market's not trying to be tricky. When markets are tougher to trade, slower, how do you guys spend your free time? Well, I have gotten much better about just not staring at screens, doing side projects, going outside, doing other activities that you're passionate about, learning new skills, which has kind of been what I've been doing to start 2026. But it's been relatively nice here. So if we start hitting the summer doldrums, I mean, I'm going to do what any rational human would do who has the autonomy that Leo and I do at times. It's, I will probably start going to sit by a pool as it gets warm here. And slow. I can still trade. I can trade initial balance and then call it a session most of the time. If I'm doing the stream, I'll do the stream.
Touching grass is definitely my future. There are some things that I'm going to put out there. Obviously, you guys know about the DOM. We are expecting next week.
Nice.
Don't know the date. And then the volume profile, delta profile. I've been testing those for a few days, so those will follow shortly. And then even like the simplest thing in the world is being able to move your chart up and down without holding a control key. I've got that's working well. And then some of the levels that we've been talking about, MGI, basic MGI and the V range, I think are going to be some components that go into. I wouldn't call it like a completely free thing that you could get, but an easy, like very low cost way to get it. I'll put it that way.
Oh, on the MGI front, Leo, I got in a verbal altercation with Claude last night, arguing about the yearly open and the quarterly open that I was trying to invent. And Claude is a back adjusting Maxor. Because he was just back adjusting things and doing continuous contract things and was just making things up.
Wow. So Claude is.
So no, but you know what that means. That means he's going on Reddit forums. He's reading the internet, and there's a mass community apparently of back adjustors that use the continuous contract and are using completely different numbers than what I think you defined yesterday.
Big grass toucher here, Leah. I love touching some grass. Big grass toucher.
Oh, you're a big grass toucher, huh? Name all the grasses.
Touch grass.
Kind of lucky we got a nice dip to buy, and you got a nice.
I mean, I covered for
pullback to sell
20 points. I could have got. I wish I would have gotten the 60.
Yeah,
but whatever. I wish I was just in my normal size there.
We're kind of stalling out here, so I'm just going to take this down to 1 and then just hold this for new highs. Does anybody have? Does anybody use like with incredible weight? I would say the internet by Elon Musk.
What?
Starlink.
Oh.
Anybody out here using Starlink reliably? I want to know like how good is the Starlink service? I do. It's amazing.
I kind of wanted it as a backup, but I need to wait
That's
until
exactly what I'm thinking about it for.
Because during like not hurricane season, like tornado season and some of the bad weather, but then I'm also thinking, is that going to also just disrupt the signal because I could lose power, which means I can't even do this until I have my backup generator thing installed. But even then, is that my priority if the power goes out is to trade on the backup generator with Starlink? No. So
a cyber engineer loves Starlink. Use it. I use Frontier. I don't recommend Frontier either, my friend. It was a bit too expensive, then dropped fiber and stuff like that. Yeah. The place we're moving doesn't have fiber. That's the issue.
Got it.
Like they have obviously the cable company, and I just can't stand the cable company, but I mean, I'm going to get it anyway.
Yeah. I live in AT&T's backyard.
Fiber doesn't exist where we're going. So
that's interesting though. Yeah, it's the one benefit, I guess, of being in Dallas is AT&T has amazing fiber.
So what's the latency on Starlink?
It's a good question.
You need a perfectly unobstructed view? It went down fine, Harshu. We had to negotiate pretty hard for it, but it's all good. It worked out. I wish that's what I have now is AT&T fiber. I have like the 2 gig or 5 gig or something. It's very fast when the weather's good. Interesting.
I still need to run the Ethernet through my house because I have a mesh system, but where my office currently is, like my 2 gigs drops to like 200 and that sucks. Yeah. But it's like I'm like the furthest point away from where the router is possibly. So it's like I just need to start running cables. I've called like several places or places that do it, and it's like absurd quotes because they are like AV people that run like speaker wires, like hiding it behind walls. I'm like, this is not that kind of custom crazy job. Like the crawl space is perfectly wired because I've had electricians do a bunch of things here. So this is like a simple job. I just don't want to crawl through my crawl space myself and do it. I'd rather pay somebody. Yeah, it's not that hard to run, but it's like the only ones that do it residential are like the crazy AV companies. I called a few others. They're like, no, we just do commercial like Ethernet routing for servers and things. I'm like, that's also not what I need. So I don't know. I just keep starting the project or looking into it, and then I forget about it. My internet's fine, I guess, up here. So that's kind of why I just haven't done it. Have you heard of Ethernet wall plugs? What do you mean? That's kind of what I'm talking about doing.
Well, you can buy a thing that makes the Ethernet jump without running the wire.
Wait, really? How does that work?
They use the electricity.
Oh.
The Romex. So basically you plug it in an outlet and you plug the other end in where you do have Ethernet, and then it turns the Romex into an Ethernet line.
So how is that different than like my mesh system?
Well, mesh is wireless. This would be wired. I don't really think that system is super reliable either.
I was going to say, it sounds like it have the same.
I would just hire an electrician that's
going
to charge you $100, $150 to run the Cat 5.
Yeah, that's what I would rather do because I'd rather be hardwired in. Like I'm hardwired into my mesh router here, but it just the speed just drops because of the distance.
Yeah. I'm hardwired into the router from AT&T.
Mesh is wireless. Yeah, I get it. I guess I'm thinking like the Ethernet plug thing. It just sounds like I'd still lose some of the speed versus just running the wire system. So yeah, I just need to do it. Like, I'm not kidding, guys. Like there's wires from the exact place where the fiber line is from AT&T, like to every room in my house. It goes through the exact same path. And I've had an electrician run additional stuff. So it's like someone just needs to come in here and follow a couple wires to the right rooms that I need the drops at. Really would not take long.
$150 to run a Cat 5 line. Where do you live? Bratislava? Do you think this shit costs $400 to run a cable line? And call my electrician and be like, hey, I need a line drop from here to here, and he'll do it in 20 minutes and charge me $100.
Yeah. I need that electrician. My guy moved to Central Texas. The guy who did all.
Dude, I have one of the best. He does like he runs a crew like for a company, and then he just does like, stuff on the weekends for people that I guess he likes. Oh shit. Brand Cooper said he wishes he lived close to you and he would come do it for free.
Well, that'd be very, very nice of you. Yeah, I'll figure it out. The part of the problem is I just know eventually I'm going to move this office anyway, but regardless, I need to have drops in this house. Granted, I'm the only one who works from home and needs it. Otherwise, the Wi-Fi is fine. First world problems. Us debating whether, like, my reliable internet that can handle all the different charting platforms, streaming, multiple computers, cameras, all this fun stuff, doesn't really ever have issues, but I still want it to be faster. I know it's not that hard to do it myself. It's just like a whole thing, guys. Like what I've learned with, I guess, becoming a new dad in the last year is the extra, like the 2 hours of time that I really get free during like nap times a day. It's just, I spend it doing other things like my weekends, because I get up with her and let my wife sleep in a little bit and then eventually put her down for the nap. Like that 2 hour window, I just try to get things done that I can do quietly. Otherwise, I try to be very present and, hanging out with the daughter, being outside. So I've just learned my downtime is when she sleeps, and I try to be as quiet as possible so that my sleep is not disruptive.
How dare you for wanting to be present in your family's life?
Maybe it's just me. I see a lot of nannies. Like when I take her some days, like after the show today, if I think it's supposed to be sunny today, so I might take her to the park when I'm done here. And you see all the nannies at the park, and they're all on their phones, and the kids are just like playing by themselves. Like that's the world I feel like we live in.
Nick be living in some bougie ass neighborhoods. You know what I'm saying?
With all the nannies. I mean, there's a lot of nannies, man. That's when you go to the park at 12 on a Tuesday. It's apparently just the nannies and me with my daughter.
You're bougie.
Yes, checking out the nannies. No one hires those kind of nannies for probably good reason.
Hey, Carlos, do you know what you can do? You can just hit the close button. You can, you don't have to announce your not exit either. You can just close and leave the chat.
I think the world I live in is a lot of two working households, and that's slightly higher income for both you and your spouse, and you work to afford a nanny. I don't know.
I'm just Nick. I'm just trolling you.
No, I'm reading what the chat's saying too.
Oh, well, somebody was giving you a hard time for talking about your personal life
instead of trading.
Well,
I think we gave the trade thesis, which was looking for shorts at 820. Otherwise, now we're going to accept into the new range, and Leo's still holding a runner long. So while we're in this lull in the market here, post Euro close, yes, the conversation drifted.
So sorry. But there is one button you can click that guarantees that you don't have to listen to it anymore. And it looks like an X. It's at the top right of the browser window, or on your mobile phone. You can just close it. Super easy. Can you break down your trade? Yeah. I kind of did that as we did it live. But essentially, this pullback came right back into, if you look to your left, I always, look to the left. You're going to see this consolidation from this morning that we broke out from. Considering the context of the overnight session, super bullish. So I'm just leaning into, the trend that already is present and exists, and, picked a spot where there's a decent amount of selling that ended up kind of pausing here. You see, like, obviously, we pushed down pretty aggressively, and then we started to stall out. There were some buyers that started to lift offers here. And so I see we go from initiative selling to a pause to then initiative buying. And so, I thought, okay, this is a pretty good spot to look for a long back into the top of the range and potentially a new high. So that was the primary reason for that trade. I trade my own account. What time frame are you looking at? This is currently a 2000 volume chart.
Hey, Nick, how's it going? Your daily briefing, which is very accurate. Well, thank you. I saw a photo of the daily chart and it's full of gaps. Oh, so that's my one that has daily candles. It doesn't have the extended trading hours because I actually just do RTH for my daily. So I can literally just see that. So yeah, it'll have little gaps, but the whole point of me showing that one was to kind of show you on the daily specifically, like the breakaway type of lockout move to the upside that it looks like is starting to form. Like you just see that type of continuation off that 23K level. But yeah, otherwise during like execution and my 4 hour, I don't care about gaps and I'm not going down the gap funnel, but I just do that for the daily to get a good picture of like what RTH is actually doing. What happened to my music? Where was that music coming from? Did anyone else hear that? Am I crazy?
Salma is now DMing me, asking me for favors. Just status update on the hat situation. And she said, or do you hate me for saying your hat is ugly? And I said, well, I was really hurt by that comment. So don't know.
You know,
I don't know, Salma.
I had to add a little kerosene to that feud myself by posting a clip about said feud over the hat. She should publicly apologize to Leo. Maybe she will.
I just told her that she had to publicly apologize if she wanted any favors done.
Do I need to short this? Probably not.
Can you get a favor, Thon Shop? It depends. It depends. What do you want? You don't say that's progress. Just say what the hell you want. Are you Kyle Schwarber? Let me look up Kyle Schwarber. I'll tell you.
He's an MLB player.
Oh, he
for the
looks pretty cool.
Cubs,
Yeah.
a few other
I could be that.
organizations.
Yeah, I could be Kyle. You have I hear I have a lot of them, apparently.
Yeah, apparently you just got one of those faces.
Kyle seems like a chill dude. Why don't you move your stop loss? I don't need to protect my profit because I'm actively here managing my trade, and I'm actually getting ready to get out of this trade now that we have this little exhaustive pop, which I'm going to do now. So I'll take that for 90 points and call it the end of that trade. If I'm actively, watching a trade, I will. I really don't move my stops because I'll take myself out of the position before it needs to be taken out.
Okay, Nick Versig, we're not doing this again. Not everyone can look like Sean O'Malley with an Adderall addiction. We've seen this movie before, and
wait, what?
I don't have face tats.
Sean O'Malley.
You know who Sean O'Malley is?
Sean O'Malley.
I would not say I look like Sean O'Malley.
No, I don't think so.
But that was like when that was said, I think, I don't know, maybe it was like towards the end of last summer, someone decided to be mean and say horrible things like that in the chat. The whole logic is I don't have face tats. Got to go as him for Halloween. Nick Versig, I don't think that one works. But that's like a rare insult. Like someone had to really dig deep for that one. Like that's the kind of insult that I would come up with when I'm like just riffing, like just back to back to back, just like saying a couple things. It's like when you look at what's like one of the sometimes like the pregame of the NFL and somebody's walking in the tunnel or whatever, and your first thought is, hey, what outfit lost to that one? Like, what did you hold up next to that? And think, yep, this is what I'm wearing publicly. It's like you just start getting on a roll like that. I'm a fighter. No, it was never my sport of choice. I could pull off face tats. I don't know if that's a good thing.
I'm still waiting for Thrawn Shop to make his request.
Yeah, Thrawn Shop, didn't you ask a favor? I feel like your window is closing.
The window
here.
is closing. The window of any favors being done is closing.
Clearly, this is a long favor. What time frame are we on? I am on a 500 volume chart for execution. I think Leo said he's on 2000, excuse me, for MNQ. God, this little pump off that 760s spot looks just silly on the 5 minute.
XYZ said you would look just like Sean O'Malley.
XY. No.
Is there any way someone can join OFL staff as support or just the vibes? We don't really have support. It's small.
Aren't you tech support for, I mean, you were my tech support when I was first starting with OFL.
Would you like to have support? I mean, we don't really need it. We have all the support we need, brother.
Send him to Lucid.
You would just be sitting here with nothing to do.
I don't wish being support for a prop firm on anybody in good conscience. It's one of the toughest jobs out there as far as customer support goes for some of the animals in the space.
For prop firm support?
Yeah, prop firm support.
Brother.
Like, I don't wish that on my worst enemy. That is a place.
You do it for the love of the game.
Yes, you do.
Where do you find the Leo Dom? You find it next week when we announce that it's actually available. That's where you find it.
I work support for a prop, can confirm.
Who said that?
Somebody in the chat. Dope book futures.
Yeah.
So I get it. Yeah. Some people are not nice. I feel like, customer service is just hard in general because the average person is just not nice behind a screen.
That's very true.
Compared to in person.
It's interesting, that people change when they're behind a keyboard.
Mm-hmm.
Not for the better, always. Not always for the better. Where is my money? I don't know, Cooper. Where is your money?
the free DOM will only be available on the NinjaTrader desktop.
Yeah, it's just a plugin. So just like any other plugin, you have to download it, install it to NinjaTrader, and then you would be able to use it. So NinjaTrader web browser doesn't support plugins or anything like that. Do you have to pay for level 9,000 data? Well, the thing is if you're getting level 9,000 data, you actually don't have to pay for it at that point because it's so many levels that the person that's going to grant that access to you isn't going to charge you for it because you're getting access to Nancy Pelosi's trades.
Hey, guys.
Hey, Jim.
How's it going?
Pretty good. Nancy Pelosi's trades, I'm all over it.
Do you have level 9,000, the Nancy Pelosi trade book?
I have 8,999. I'm just short.
So you're still paying like $10,000 a month, right? When you get to 9,000, it's free.
The big launch is next week, Leo, for the Dome?
That's the rumor.
Very nice. I'm looking at this NASDAQ market, man. This is turning into a trend day for sure.
Mm-hmm.
It's
slowly drifting up here.
Getting to that point, I think we're hitting some areas where we could target these prior swings, 26,000, 25. A stretch would be 26,300. That would be another decent, a couple hundred points. I don't think we'll get there today, but it is starting to look like those new highs are definitely in play for the ONQ. I have no idea what ES is doing.
Yeah, February 3rd we had, was it February 3rd? Hang on, let me look. We had a swing high at 26,030, give or take a couple ticks.
Exactly.
We're getting there, baby.
Yeah. And
it's
of
amazing.
course, you would have the proper level because you don't back adjust your charts.
No. Didn't we talk about this yesterday?
Yes. But, it's just like friends don't let friends back adjust charts. I just can't stop. I don't want any of my friends on YouTube to be led down the wrong path.
No, you don't have to tell me twice. You told me, Shy told me. I'm not going against her.
Yeah. Axe will tell you.
Okay. I'd hear it every Friday morning at Capital Preservation Friday and how I shouldn't do that.
Yeah.
Yeah. So anyway, you guys both flat right now?
I am.
Yep.
All right. Pretty awesome. Any aspirations for this afternoon, or are we good for the day?
Without another pullback, I might be calling it a session. I don't really want to chase this, but we'll see.
All right. Let's give these guys a round of applause for another job well done. And appreciate you guys as usual. Thanks everybody for being part of NinjaTrader Live. Appreciate the subscriptions, the thumbs up. Leo got the chat going when he popped in here. Appreciate you guys. Didn't miss that.
Don't make me do it again, Jim.
I know. Well, I'll see you tomorrow, right, Leo? I'll see you both tomorrow, right?
Yep.
Yeah, tomorrow morning.
Yeah. Cool beans. Can't wait for that. And I'm going to see Nick on, I don't know, Thursday night or Friday, whenever I see Nick. Looking forward to that for sure. So having said all that, guys, this afternoon I want to remind everybody, Trade the Close, XYZ Stowe and Jack Gleason are going to be with us today right after Shai does her 2 o'clock afternoon wrap-up. So I'm looking forward to that. In the meantime, we're going to pivot over to a really quick Edge report, and I look forward to talking to you guys tomorrow.
All right. Thanks, Jim. See you, Chad.
Thanks, guys.
All right, let's take a look at the NASDAQ. Everyone was talking about the NASDAQ, so I just wanted to throw up a daily chart, then we'll go to an intraday chart. I mean, it's risk on today, everybody. I mean, look at all the green. Everything is green except the energies, and the energies have been driving the boat lately. Crude oil is down 6.85%. It's down to a 92 handle. That's a big, big, big sell-off. Market's starting to get confident that the apex of this whole stuff going on in the Middle East is behind us, and perhaps there's going to be an accord. In any event, I'm looking for targets on this daily chart on the NASDAQ, and I'm like, all right, I got to go all the way back here to this swing high that me and Leo just talked about. I'm just going to eyeball it with the crosshairs right now, right around 2630-ish, give or take. Actually, I could tell you exactly what the high is. I'm going to use my mouse button there, and that's 26.027 and 3/4. Then after that, we have another swing high, a little bit higher here, and this is from the 8th of January. Remember, this is the calendar year high, not the all-time high, but the calendar year high, and that swings at 26,349. There is no wicks or shadows, as they say, around this daily candle. It is all buying. Looks like trend day is in place. You never know what could happen with the news cycle, so be on your toes. Let's just kind of shoot over to a intraday chart right now, just to kind of see. I mean, this thing started really when the bell rang, right? This is the initial balance low. We launched off of that initial balance low and kind of made these volume nodes along the way. They're kind of awkward, to be honest with you. On the volume profile, the official point of control right now is 795. That would be a pretty decent retracement to get back down there, by the way. But that would be within the IB high. Very possible. I don't know. But we broke through JAX3. We broke through that R1 level. We broke through that one-day max by MenthorQ. And just kind of looking up, there's really not a lot of targets until you get all the way up to R2. And that's at 26,058. So right now, though, I'm not going to try to hit the sell button until we get some kind of confirmation candle that we're at a high today. We are not there. And then look at there's no divergence here on this RSI. This is really nicely sloping up above 70. Remember, it could stay above 70 for a while, right? It doesn't necessarily mean that it's overbought, hit the sell button. That's not a signal or an indicator for me. It could stay above here. It's just going to tell me it's strong, right? We're above 70. It's relative strength index. It is strong. So we're going to keep it there until we break down below 70. And then when it does that, if it does that, it might not, probably won't. But I want to see the velocity on how quickly the oscillator moves. And this kind of works it doesn't matter which oscillator you're using. If you're using MACD, if you're using CCI, if you're using Bill Williams, or the Williams oscillators, I mean, it's the velocity of the change of that oscillator is probably more important to me than the actual just raw number. Now, this is pretty strong right now at 82, by the way. So we'll keep an eye on that as we go forward here. And we got 1 more minute left. I'm going to quickly go over to the Bitcoin and just kind of see where we're at. Now, remember, that 75,000 level is kind of key. And here's the daily chart really quickly here. We're above it. We're above it, barely. We're above it. There's my area of resistance right there. Above all the moving averages, and we have a potential second moving average cross. That's that 8 over the 50. They also could suggest some bullish price behavior. And then RSI again is sloping up pretty nicely. So we'll see if we get a close above my rectangle and then a continuation candle the next day. Then that will tell me, hey, I'm going to start thinking about being bullish here. Intraday, it's tight range, kind of. I mean, I don't know. I mean, we hit the IB high. It was pretty much the high. We're at 94% of the 34-day range, so I guess it wasn't a tight range. But we sold right off of that high, right off of that IB high, and hit that VWAP. Perfect VWAP touch right there at JAX3. Rally cap back on, right up to R2. So right now, buyers are in charge off of that VWAP. So it's an awful important level for me as well. All right, that is this morning's Edge Report. I appreciate everybody being here with us, NinjaTrader Live. We had a great lineup. We're going to have even better lineup this afternoon, or equally as great lineup this afternoon. Appreciate everybody. Appreciate the subscriptions, the thumbs up, all of that stuff. In the meantime, have a nice, relaxing lunch. We will see you this afternoon.